see dominate over the next couple of months is volatility.
There's still work to be done, I think, before we can say this bear market's over.
Higher global interest rates, lower equity prices, and a stronger dollar, we think will continue into year-end.
I think people understand that if you're a longer-term investor, eventually the tide will turn.
There's so much fear out there, and it's been priced in, so I think we get this little bounce.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio, on television. An interesting week, a nuanced week of economic data. And yes, the equity markets, we'll get to that here in a moment. John Ferro is off today at a symposium. Kaylee Line sits in, which is a good and beautiful thing. Futures up 19, Dow futures up 98. I don't know where to start. I got to go big picture, 60,000 feet, Lisa. 10.1% inflation is not 9.9% inflation.
You're talking about the United Kingdom coming in hot yet again, another CPI print. And to me, this is what stands out. Inflation reads keep coming in hotter than expected, which is the reason why Fed officials and other central bankers are getting worried. You can hear it in the rhetoric, and markets are pricing in much more.
And markets are pricing in. We
exactly.
see on the Bloomberg screen today that inflation adjustment here. I don't know where to start. I'll start with the 10-year real yield. Is John doing is the real yield on Friday?
The real yield is on Friday. John Ferro is not.
He's not here. He's on sabbatical.
Moonlighting.
On
yeah,
sabbatical.
Exactly.
And we'll talk about his sabbatical.
Will we?
Yeah, he's giving a paper. He's either at Glasgow or Edinburgh giving a paper.
On
I don't
meditation.
know. Yeah, well, no, it's not. It's on something more than that. 1.64%
more than
on
that.
The 10-year real yield, breaking out.
Yeah, and if you look at the absolute nominal yield, it's the highest level going back to 2008, at least in the United States. So we're looking right now at people wondering where that neutral rate will be and how much has to be reset in markets, given that we have a more expensive funding cost for a longer period of time.
And on a Wednesday, Kayla, I'm going to bring this in after talking to Emily Wilkins in Nevada yesterday. The midterms dawn, and it just is about inflation. There's no other way to put it.
We have less than 3 weeks to go, and the economy is number one. And what is the most present, perhaps, to the American people other than gas prices, which is why we see the U.S. administration making its next move, the next tranche on the tapping of the Strategic Petroleum Reserve.
I got to hear from Javier.
They got to do what they can, right? And there's only so much that the Biden administration can do to control the price at the pump.
Yeah, but to your point, Tom, at what point is it an emergency? How do they justify this from a pricing standpoint?
I don't have this. How empty is the salt mine of this? How empty are we emptying?
The lowest going back to the early 1980s,
Decades.
if you take a look at that,
Okay, over to the equity markets. Not the Queen's gambit, it's Netflix's gambit. They get a big pop here. I see all the other financial media surging in that. Come on, the thing is cratered, right?
Yeah, we have to keep in mind the levels it's coming off of. But a double-digit move in pre-market trading is nothing to sneeze at. And really, the story is just that they are no longer losing subscribers. That's really it. Is it the worst is over? Perhaps. But again, it's not the kind of growth we were seeing from Netflix in years past.
You talked about who's watching Netflix anymore. All the kids are watching Jeffrey Dahmer, which is actually
this drama. I featured that with Sweeney yesterday.
And honestly, I mean, this is what they're all talking about. And I'm thinking to myself, really, you guys are...
It's spooky
a show
season.
About a serial killer and someone who eats people. I mean, go figure, but that seems to be juicing the numbers right now.
Paul Sweeney with us 9 a.m. on Bloomberg Radio is truly expert at this, and he really thinks the road ahead for the streamers is difficult. Equity markets 3 days in a row, up we go. I walked in, it was red and green, and to start the data check, Lisa, futures up 18, Dow futures up 85 is another good day.
Yeah, and how much is this on the heels of earnings that are better than expected? Of course, the expectations are beaten down completely. I'm looking at dollar strength across the board, and the yen. I'm really focused on the yen breaking out to new post-1990 highs as people wonder whether the Bank of Japan is going to intervene. And you also heard overnight they continued to reiterate their confirmation they are going to keep yield curve control, even as yields climb above that upward band.
We'll do that in the data, Kaylee. Very quickly here, Julian Emmanuel, I'm going to mention this a lot, folks, into earnings season. Every day at ISI out with an incredibly sharp memo. And he says, look, we're at a recessionary average PE right now.
Yeah, he points out that earnings are down about 5.3% with the companies we've seen reporting thus far. It's about 50 of them or so in the S&P 500. But what's also notable is that you aren't necessarily seeing the huge downside surprises. The average surprising, according to Julian Emmanuel, 0.8% and 1.1% respectively when it comes to earnings and sales.
We'll go deeper on the data in a moment. Again, futures up 18. The VIX won't move, 30.78. To me, that's critical. The 10-year yield out to new highs, 4.06%, 2-year, 4.47%. I need a brief.
All right. Well, let's talk about Fed speak because I know everyone's just dying for more of it.
Can't wait.
Minneapolis Fed President Neil Kashkari speaking again. St. Louis Fed President James Bullard, he's speaking twice. Chicago Fed President Charlie Evans. The Beige Book comes out at 2 p.m. Tom will be scouring through the Beige Book. Minneapolis Fed President Neil Kashkari yesterday saying that if core inflation does not stop accelerating, there is no reason for the Fed to stop hiking rates beyond 5.5 to 5.75%. Again, this goes to the scope for a higher yield going forward.
Bullard talked twice, and Kashkari talked yesterday and again today?
Correct.
What are these guys are like assistants. They're like senior economists at a Wall Street firm. Well, Get out there if you're not talking
exactly.
6 days a week.
Right,
well,
repeat yourself.
You know, the more
Why are you in Denver?
Well, we're also getting a slew of earnings, which arguably may be more important than some of the Fed speak. I'm just suggesting, although maybe not. Procter and Gamble later this morning, and that I actually am most interested in, just because it's a read on the consumer. Tesla and IBM after the bell. Netflix shares, just to point to what we're seeing after the earnings, 13.8% gain before the market. Also
Further
looking
this morning.
United Airlines, I know that you're speaking later this morning to the CEO. That popping as well, more than 7%, because people are still flying and people still have, you know, budgets to do so, even though they're really expensive. And at 1:15 p.m., Kaylee, this is to your point. President Biden is delivering remarks on additional actions to strengthen any energy security and lower costs. That's the way that he described it. Will he announce a release of the Strategic Petroleum Reserve? But from where? I'm looking at diesel prices. We're focused on gasoline. Diesel continues to surge. And if you look at the stockpiles, they're at some of the lowest levels that we've seen in a very long time going into winter. Tom, to me, this is one of the most concerning issues because this affects everything that we do and everything that we buy.
To me, it's all politics and it's drowned in the first Tuesday of November. Joining us now, this is important, as Lisa mentioned, and I guess we could go all yen, but we're not going to do that. Kamaksha Trivedi joins us, head of global foreign exchange, interest rates, emerging markets at Goldman Sachs. Kamaksha, I really want to talk about my conversation in IMF with the gentleman from Booth School, the former head of the Bank of India, but we're not going to do that today. We're going to talk about the Goldman Sachs dollar call. How do you determine when enough is enough on strong dollar?
Look, I think we are still some way away from that. I think, what are we learning? We're learning even over the last few weeks is that, the U.S. economy still looks somewhat overheated. The unemployment rate is at a, historic low. Inflation, core inflation is at historic high levels. And at the same time, you're seeing already some other central banks in the world starting to slow down the pace of their hikes. You've seen that with the RBA. We're probably going to learn from the Bank of Japan next week that they're still maintaining yield curve control. And you're seeing, struggles on the UK side. And it'll be an important question whether the Bank of England can deliver, hikes that beat market expectations. So, FX is a relative game. The dollar remains, first amongst equals in this.
Right.
And, the Fed looks the most unconstrained amongst global central banks.
Let's talk about an absolute game, not just a relative game. And when you talk about rates, increasingly the conversation is around where we'll end up post this disruption that we've seen inflationary wise. How much do you see the likelihood of 0% interest rates post whatever this is once we've worked through this cycle, or will we never see those again in our lifetime? And are we going back to a more Steve Ricciuto-like 2% Fed funds rate as sort of the base case?
Look, I think that it may be some time before we get back to low rates. I mean, I think the baseline, I think for many people and for us is going to be, higher rates for longer. Even under the most, optimistic inflation projections, inflation comes down only very slowly. So yes, at some point, some of these underlying pressures, will fade. I think there are some encouraging indications, even in the recent CPI reports, whether it's good prices, some parts of the commodity complex have softened compared to earlier in the summer. And over time, some of those other parts of of CPI will fade as well. So I think you will see inflation come down and rates come down as well, but I think it's going to be a pretty slow process.
Well, Kamaksha, finally, let's talk about where rates have stayed down, and that would be in Japan. We have dollar-yen now 149.45. We are very, very close to 150. What's the breaking point for Kuroda and his team if we're talking not just intervention, but potentially abandonment of yield curve control? Will we get there?
We don't expect it imminently. I mean, they have a meeting next week. We think yield curve control, will be maintained, and I think that it's not the level of the currency per se. Even when you take into account their last intervention, what's already become apparent is that the beta of the dollar-yen cross to the real rate differential has come down. They will, that's what they wanted to achieve. So this is not about levels. It is about the speed of the move. We think dollar-yen can move to 150, maybe even beyond that if these policy parameters remain in place.
Kamaksha, quickly here, I've got to go to your PhD work at Oxford on India. We've just had another breakout of India to 84, 83 to the dollar. That seems a crisis. Is it a crisis or is it idiosyncratic urgency in India?
It is not a crisis. I think what is happening here is India, actually the rupee has been one of the better performing currencies across most of Asia versus the dollar. You had significant reserves being used to get that outcome. I think what you're seeing is a recognition that you don't want to keep using reserves. You don't want to draw a line in the sand when there is a broad dollar move. And yeah, we are having a broad dollar move and they're letting the currency to, move alongside that.
Great first brief of the morning. Thank you so much. Kamaksha Trivedi with Goldman Sachs as well. Lisa, I need an auction update. I didn't hear it in the brief. Any auctions today?
No, that's why I didn't do an update. But this is going to be something that people are looking at. Is that enough for you? I told you about the beige book. Why aren't you excited about the beige book?
I have such honor for the late Rich Yamarone of Bloomberg, who did an improved beige book that was vastly superior. I get very little out of it. I don't know. Futures up, she's killing me. Futures up 17. Dow futures up 81. The VIX 30.79. Kaylee Lyons is with us. John Ferro is not. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Ukraine's military claims 13 drones made in Iran were shot down in the southern Mykolaiv region overnight. Now, it happened as officials reported more attacks against the country's infrastructure. President Biden's administration is pressing Congress for new authorities to speed up production and transfer of weapons for Ukraine. Hong Kong Chief Executive John Lee has unveiled a plan to woo back foreign talent and ease housing woes. It's an attempt to revive the city's status as an international finance hub. Lee announced that he would cut property duties for non-permanent residents and relax visa rules. Years of tough COVID-19 policies and political turmoil triggered a brain drain in the city. And inflation is keeping travelers closer to home in the U.S. New data from Deloitte shows about 31% of Americans surveyed plan to travel between Thanksgiving and mid-January, down from 42% in 2021. Financial concerns are the number one reason. The number of households that expect the economy to weaken next year, that also rose. Kakaoco CEO Wan Nam-kang has resigned after a nationwide service outage that caused chaos in South Korea. Speaking at a news conference, Nam-kang apologized for the disruption to the country's top messaging and social media service, saying it will take a long time to recover people's trust. The outage has led lawmakers to consider increasing government oversight of the company. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Everybody's looking at the UK and said, please, 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 can you get the messaging right to us? We are all confused. Because, what we need for the currency and what we need for the market is for the volatility to go away, for everything to calm down, and to put this kind of period of massive uncertainty behind us.
Kit Juke, SocGen there yesterday, really quite good on the total picture of foreign exchanges. We just heard from Dr. Trivedi over at Goldman Sachs. That's part of a data check today. Dollar, I'm going to call it fractionally stronger. We're going to do Britain here in a moment, 112.70, slightly weaker, but we've really got to focus on what we see in yen. We are on an intervention watch. There's no polite way to put it. 149.47 is ever weaker Japanese yen this morning. Oil, $84 on American oil. Brent crude up to $91, a little bit of a lift there. And of course, we're looking at the shifts in dynamics of the yield market. The spread, negative 42 basis points with futures up 16. I love Jeremy Warner today, Lisa Abramowicz in the Telegraph. He echoes Churchill. His trust goes to PMQs. And I guess that's what we're going to see in PMQs today, to paraphrase Winston, the blood, toil, sweat, and tears of PMQ. It's going to be something.
It seems as though this has been not only a difficult time for Liz Truss, but a make it or break it moment. And that comes in about 40 minutes. And Bloomberg's Lizzie Burden is perhaps playing music out there in Westminster and beyond. Lizzie Burden joining us now in London. Lizzie, how important are the PMQs coming up in about 40 minutes' time?
Couldn't have put it better myself, Lisa. It is a make or break moment. Apparently Liz Truss has had extra prep this week because, of course, rhetorical flourish is not usually her strong suit. But this week, Keir Starmer, the opposition Labour leader, is likely to focus on austerity 2.0, as he dubs it, because he needs to save another £40 billion to plug the hole in the public finances. He's said that he wants all government departments, bar health and defence, to shave 15% off their budgets. He's not even guaranteeing to protect pensions, and pensioners, of course, a huge constituency, important constituency for the party. But at the other end, we're hearing that he might want to raid bankers' profits, energy companies' profits. So that could potentially make the UK less competitive when Truss wants growth, growth, growth.
Kayleigh Lyons with us this morning. Kayleigh, what I find interesting, this is not a Brexit analogy. All the analogies are back to 1976.
Right. This is a very difficult moment for reasons aside from just politics. There's a huge economic question here, Lizzie, because, of course, you still have the energy cost burden, the cost of living crisis. That is evidenced by the fact that you had 10.1% inflation in the UK in the data we saw come out just this morning. How does that put additional pressure on the fiscal side with Liz Truss? Not just that, though, with the Bank of England.
Well, I was speaking to the Foreign Secretary, James Cleverly, earlier. He was floating around in Westminster. He did say that inflation, this figure is concerning because, yes, we are into double digits, which makes it even more worrying that Jeremy Hunt is not guaranteeing that he'll protect pensions. In terms of pressure on the Bank of England, it was already a debate between 75 and 100 basis points. But investors had pared back their bets from 100 when Kwarteng was replaced with Hunt. And this is only a slight beat on economists' expectations, so perhaps it doesn't really move the dial. But the other interesting thing is that the Bank of England has said it's going to go ahead with quantitative tightening the day after the Halloween budget, except at the long end of the curve. So the BOE really showing that it wants to fight inflation. It won't be beholden to the government, but it will keep an eye on financial stability. Confident foot forward from Andrew Bailey.
So, Lizzie, is it safe to say that the BOE has been able to reclaim credibility?
I think that Andrew Bailey is getting more plaudits for his handling of this than perhaps he was when he forgot how much he earned, or he was making controversial comments about whether people should ask for pay rises in a cost of living crisis. He's won the game of chicken with Kwasi Kwarteng, and this seems to be a pretty smart compromise on QT.
Where are we right now when it comes to where they're going to go? Are they going to have to raise quite as much? And if they don't, can they curb inflation that today came in at the hottest pace going back decades, hotter than people expected?
I think it depends partly on how the labour market reacts. That's one of the reasons why you've seen this rise past the double-digit mark. There will be members of the committee who want to go for the 100 basis point hike just to front load and clamp down on inflation expectations. But don't forget, given that Jeremy Hunt is taking away a lot of the sugar rush that Truss had wanted to offer to the British population, the recession risks are heightened. So we're back to this very difficult struggle of not wanting to add to that by hiking too aggressively.
Lizzie Burden, thank you so much. Greatly appreciate it. Outside Parliament today on a perfect autumnal October day in London. I want to go back to earnings. It's earnings season. We've sort of been doing the econo-babble, maybe too much. Procter & Gamble today with a dividend growth of 5%. In my world, that doesn't get it done anymore.
Right. Well, people are looking for that much more because they're not getting it on the risk-adjusted return given where rates are. Just to give you a sense, though, of what perhaps we can expect, Nestle's chief executive officer just put out the biggest increases in price going back decades. And
price of
just
products.
now, price of products. And now what you're hearing is the CEO saying there's more to come. So this is a real tension here. There has not been a pushback significantly against at least the world's biggest food company when they raise prices. When do consumers say, no mas, we
What do
got
you
to
see
stop?
here, Kaylee?
Well, I just question what that means for the Federal Reserve, because isn't what the Fed wants to see the demand destruction kicking in, the companies not being able to execute that kind of pricing power and pass on higher input costs? They want to see consumers pushing back against that. And if we're not seeing it yet, isn't that problematic?
What don't you get?
I don't get the idea that monetary policy can manage the demand choices of different cohorts, different deciles of the American public. I mean, there's a huge part of America flat on their back.
Right. And
but there's a lot not.
Right. And this is something you were talking about, people sipping champagne and buying luxury goods. And this is sort of the other end of the spectrum. And then if you have food makers that, sure, they're able to pass along price increases that are bigger than they've seen in decades. But where is the marginal dollar not going?
I mean, if they're going to raise the price of my vintage Wella Balsam instant conditioner 1993 24-ounce, I'm still going to buy it.
Do you still use bow tie wax?
No,
is that
I don't.
Still a thing?
No, I don't.
For a while. You were the one that introduced me
wax.
to it. Is that expensive?
Yeah, it is.
Too much?
And it's gone up. Like even Tang went
out.
up. Tang went up, which was just terrible. It's time now for the Bloomberg Crypto Report. We do this on Wednesdays with Kaylee Lyons, of course, the star of all having to do with what's the nuance of crypto that you learned yesterday?
Honestly, I think what's interesting in crypto right now is it's arguably the least volatile of any asset class, which is the exact opposite of what we've gotten used to. But as we have monetary policy roiling stocks, roiling bonds, crypto has stayed pretty static. It's almost interesting because of how uninteresting it's become.
Are there more losses to come from
It's a good question.
Scandals or non-scandals?
Well, that's always a big question mark when it comes to this space. But we've been in this range in and around 20,000 for months now. And nothing really seems to be a catalyst for a material breakout either way.
I got a huge response from my interview. I think it was in Washington with the head of the CFTC.
Yeah, I watched that one. It's a good one.
Well, 5 people watched it. But what a battle.
There's a huge regulatory question mark and definitely a turf war between Gary Gensler at the SEC and the CFTC.
That covers crypto till the end of the year. Stay tuned. Bloomberg Surveillance. Good morning. Bloomberg Surveillance. Good morning, everyone. Really thrilled that you're with us today on radio, on television. It's a Wednesday, and it's an odd week. It's still the turmoil we see, 10.1% inflation printed in the UK. But with an equity lift here, futures up 7 right now. They've given back a little bit in the last 10 minutes or so. The yield story, Lisa, help me here. 2-year yield, 4.48%. I'm still not used to it.
Especially because the 10-year yield also rising. Again, this is not just a front end rising, long end declining. You're seeing it now 4.07%, the highest level going back to 2008.
John Ferro on sabbatical. I'm unsure if it's Glasgow or Edinburgh, but he's at a symposium on the history of the Dow Jones Industrial Average, and he's giving a paper on the FTSE and the Dow. I mean, it's just really
good. He's only
good.
saying this because John's not here to shut him down.
And it's just really, I think it's great. It's like a 42-page paper.
Did you think about that last night?
No, it's like, he got a couple kids at NYU Stern to write it for him as well. We're going to digress right now, as we can do with Kaylee Lyons and Lisa Abramowicz, and talk about the dog of the day, which is from Santa Barbara, California. Olaplex, down $1 gazillion today. And as we have Procter & Gamble coming out today, we thought we'd go to itty-bitty shampoo that's so expensive Sephora doesn't even sell it. Kaylee, tell us about down 45%.
Yeah.
Olaplex.
I mean, it's brutal. But to your point, Tom, this is not cheap products. It's high-end hair bonding Girl stuff. Yeah, exactly. This is the stuff I splurged on before my wedding.
You've used this.
I have used this. The thing is, though, it was
just girl stuff.
By definition, a splurge. This is not drugstore shampoo. And what's interesting is they're seeing their sales slowing down. And the analyst research this morning is pointing to reduced spending power on the part of the American consumer. If you're feeling crunched in the pocketbook, why would you spend $80 for a very small bottle of shampoo?
But here's the other thing here. I mean, I think that there's a question of
not
even
Irish
if you're not
Spring.
feeling crunched, there's no way you use Irish Spring.
I do.
No, you don't. And you certainly don't use that on your hair. I'm looking right now. Olaplex shares down about 45% in pre-market trading. To me, the takeaway is if you miss, given how low expectations are, you get pummeled. And to me, that's the upside, which is not that significant unless you're, say, Netflix. And the downside is really significant. And to me, this speaks to where people are, at least in sentiment.
To bring this back to my world, to me, it's like they're basically running it, they're doing it, hoping for a sellout to a larger company like Procter & Gamble. And I would say that's all changed with the new risk-free rate. The world's
I would agree.
Completely.
You can't just hope for a better future. The hope has been eliminated with rates now that are above 3%, headed above 4%. And so how do we then reshape an entire world? This speaks to what you're talking about, Tom, when you talk about zombie companies. How many of those start to come out of the woodwork, both on the public and private side, as you start to reset, and not over the short term, Tom, but over the longer term, because people are talking about where that final risk-free rate will be?
Number 3, jump starts repair deep within the hair strand. I'm working.
Usually
now.
you use number 3, 4, and 5 together. It's a system.
Do you have a martini in your hand when you use this stuff?
Oh, wouldn't that be nice? No, but I think Lisa's point is an interesting one about kind of the longer term changes here. And frankly, just how long it is going to be that we're talking about borrowing costs being this high. If you listen to Neil Kashkari yesterday, he's saying there's no guarantee we pause at 4.5%. If you're still seeing an acceleration in underlying inflation, we probably aren't going to be able to do that. So it's a question of, as the market has adjusted to what it thinks ultimately the terminal rate will be, the data could quickly lead us to think something else.
What happened to Kashkari? How is he just sort of just the most extreme? Well, no, but he was the most extreme on the dovish. Now he's the most extreme on the hawkish, saying, the sky's the limit in terms of how high we raise rates. Where's the compass?
I'm glad you bring this up. What we're going to do, folks, now is really address the path here that we have not only the economic data today, but also the path to get to September 21, which is, November 2nd, which is not all that far away. At the IMF meetings in Washington, the one name that kept coming up was Brainerd. Lau Brainerd. John Lipsky was at Wesleyan, way ahead of Lau Brainerd, remembers the first time he met her, and that she was absolutely unique. And I think of the names that you mentioned, Lisa, you do a great job of this every day. McKee owns the high ground and interviewing him. I really wonder if the only voice that matters right now is the vice chairman.
I wonder if that's the case. And her voice has been decidedly a little bit more dovish than, say, Neil Kashkari. And yet, the numbers are showing they keep coming in hotter than expected. And Kaylee, to your point, these consumer companies able to pass along price increases, Olaplex and their $80 shampoo notwithstanding, it signifies this has more to go.
Let's do this right now. Lindsay Pieggs was with us. We've had some technical challenges, and the chief economist at Stifel joins us this morning. Lindsay, as we vamped to get you set up for us, we ended up talking about the Fed and the importance of Lau Brainerd. Explain to our audience worldwide the importance of the gentle lady from Wesleyan.
Well, I think she does hold a specifically important role in terms of tempering expectations. While we have heard opinions drive significantly higher to the more hawkish side, she does seem to offer a sense of to the market. She says the Fed is looking at inflation. There's still more to be done, but there's also a need to, at some point, pause and assess earlier policy decisions. And that's quite a stark contrast to what we hear specifically from Neil Kashkari out of Minneapolis, saying there's essentially no ceiling to where rates could potentially go as inflation continues to push higher, which sends a more a more volatile message, a scarier message to the marketplace.
Well, and maybe that's by intention, right? Maybe that's because he's looking at the stock market and saying the more that you see some sort of sell-off continue and the more you see yields climb, the more they will achieve their goal more quickly. So this could be some messaging. I do wonder, though, if you take a look at his message, he's saying if core inflation continues to accelerate, then perhaps they're not going to stop at 4.75%. What are the chances, in your view, that core inflation will not peak by the end of this year?
Oh, I certainly don't think his message is unjustified, particularly against the backdrop of the latest core CPI number now pushing back to a cycle peak, a new cycle peak at 6.6%. And I think this underscores the idea that the risk to inflation is still to the upside. So the notion that inflation will just nicely and calmly materially decline to the Fed's 2% target over the coming 12 to 18 months, allowing the Fed then to not only reach that terminal rate near term, but begin to cut rates potentially by the end of next year. I think this highlights the overly optimistic sentiment baked into the Fed's forecast. And to Kashkari's point, if inflation continues to rise or even remain elevated at these new levels, the Fed is going to have to take a markedly more aggressive pace or pathway to get inflation under control. So when we talk about have we seen peak levels of inflation, that matters less than the question of will inflation remain elevated beyond the timeline that the Fed is anticipating in order to get to a more reasonable terminal level. And Kashkari says, well, maybe not. And I tend to agree with him because inflation has shown such a persistence, such a stickiness in the numbers, particularly in the service numbers.
Yeah.
I think it is too early to say we're on the downside from here.
And even on the good side, and this is something that has been honestly keeping me up at night, the diesel prices, the diesel gas, given that prices have remained so elevated, storage levels are so low, and that this is pivotal for everything that we transport, for everything that we do, particularly with heating homes. How concerned are you about an inflationary impulse heading into year end from diesel prices that continue to climb despite some of the SPR releases of gasoline, despite some of the other issues done to drive down costs in other places?
Oh, I'm absolutely concerned. And you're right. A lot of the headlines seem to be misguided by the slight decline that we've seen in terms of gasoline prices for the average consumer. And certainly from a headline perspective, that's what the average American focuses on, what they're filling their car up with at the pump. But to your point, when we go to the grocery store and we buy goods and we're purchasing services across the economy, one of the biggest input costs is those transportation costs. And as diesel costs rise, as labor costs rise, as parts of materials costs rise, all of these factors are going in to a higher level of prices that is being forced onto and businesses.
Well, Lindsay, to that point, we are seeing these companies passing on those higher input costs, exercising pricing power, just raising prices for the consumer. And we're seeing with companies like Nestle that their consumers are tolerating that. How problematic is the retention of profit for corporations for the Federal Reserve?
Well, keep in mind that consumers, yes, are tolerating it, but that doesn't mean that it's not causing pain or causing a change in behavior. Already, we've seen a precipitous nominal decline in terms of consumer activity, flowing from about 8% last year to just about 2% this year. So some consumers are nominally reducing the amount of goods and services in their basket. For other consumers, they're reducing the quality or the price point of the goods and services that they're purchasing. So maybe they're not purchasing Pantene or the Olaplex shampoo, and they're getting Walgreens brand shampoo.
Oh, no, she went
there.
there.
And for other consumers, this means that there may be foregoing purchases for 1 or 2 months in order to buy a larger ticket purchase in month 3 or 4. But regardless of the form that it's taking, consumers are changing their behaviors, which should be a red flag for businesses that continue to try to pass on 100% of the cost increases to the consumer.
I mean, there's no downside to Lindsay Piegza. She's such a social foundation. She's on the Olaplex story. Like, what other economist in the world's
that's what people are focused on. They're focused on Olaplex. Do you use Olaplex, Lindsay?
Yeah, unfortunately, $80 a bottle is beyond my budget.
Okay, well, talk to your derivatives trader. Yeah. Lizzie, thank you so much. Greatly appreciate it with Stifel this morning. Really brilliant there on the Fed. Of course, the firestorm of response we got this morning is on Irish Spring.
Oh, Irish Spring, yes.
I remember when it came out with these silly TV, it's Colgate-Palmolive. They invented a $1 billion brand out of nowhere. I think I was in college at the time. And they came out with these ridiculous ads that were literally campy the first day they came out. And now they have all these different, they vamped the brand out to charcoal this and hemp that. And Anthony emails, and thank you, Anthony, for watching. It's really important that we know too much information. Anthony, the only soap he uses. Thank you.
Single bar of soap in the shower.
Body wash for men, $4.99.
There you go. The anti-odor flex. Yeah. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The European Union is said to propose sanctioning 3 Iranian generals and 1 business for providing military support to Russia in its war against Ukraine and their involvement in providing Moscow with drones. The targeted business is responsible for the Iranian drones that have been supplied to Russia, the generals involved in Iran's cooperation with the Kremlin. Soaring food prices drove UK inflation back into double digits in September, intensifying pressure on the government and central bank to act. The consumer price index, it rose 10.1% last month from 9.9% the month before. That's according to the Office for National Statistics. Now that matched a 40-year high reached in July. Mitsubishi UFJ Financial Group is said to be evaluating an acquisition of some loan portfolios from Credit Suisse to expand its U.S. business. Japan's biggest lender is also vetting bundles of the Swiss bank's global loan in various sectors. Credit Suisse is racing to raise funds with just over a week to go until the unveiling of a critical turnaround plan. The global smartphone market has its worst third quarter since 2014. This as economic headwinds push consumers to delay discretionary purchases like personal electronics. Shipments of smartphones around the world fell 9% in the 3 months ended September, extending a decline that's lasted for all of 2022, according to market firm Canalys. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
The core services inflation, which is the stickiest of all, keeps climbing. And we kept getting surprised on the upside. We don't see progress in underlying inflation or core inflation. I don't see why I would advocate stopping at 4.5 or 4.75 or something like that.
Neil Kashkari of the Minneapolis Fed, one of my favorite people, always interesting, as Lisa mentioned earlier, entertaining as well. For those of you on radio, it looked like he was giving a Fed discussion at a wedding reception.
Totally. Maybe it was.
The bride is beautiful, but
let's talk about inflation.
Very quickly, Lisa, what is the Kashkari distinction right now?
Well, the Kashkari distinction is that he is very concerned about the fact that we have overwhelmed expectations time and again for the CPI print. And it's also, I believe that he uses Irish Spring. He phoned in and said, he said, I'm gonna stay away from inflation and head for the 4.99.
We're gonna keep going on this morning. We're gonna keep going in the Fed speak as well. Bullard of St. Louis with our Kathleen Hayes. Really looking forward to that at 3:30 this afternoon. That's actually a very important discussion along the x-axis as we have a Bullard-like regime change at this moment. On the markets, we had green on the screen, really quite nice. Back to red and green on the screen. There's some volatility out there where the VIX actually elevated back to a 31 level, 10-year yield 4.07%. We're buttressed up against new highs in the 10-year yield, 4.49%. In the 2-year, I'm looking at some curve, flatness now, 43 basis points of inversion. But a headline for me, Lisa, is the real yield, 1.65%. breaking through the 161 level. My average pre-Great Financial Crisis is about 2.05.
You know, I keep having your voice in my head, and it's a little disturbing. It's about inflation, stupid. It's about inflation, and we're coming in. It's about 3 weeks until this election, and it's about inflation, and it's about the economy, and that's it. That's front and center, which is the reason why you're getting all sorts of things. So we want to reset and get a sense of what this election is going to look like. We have 3 weeks. Mohammed Yunus has been tracking this all from Gallup. He is the editor-in-chief there. Mohammed, what are you looking for in terms of turnout, in terms of excitement around an election where we really have seen the odds shift pretty dramatically, whipsaw over the past few weeks?
The number one issue voters have in mind when they vote, and we know this from generations, is the economy. We also see that in our data. 40% of Americans now mention the economy or some sort of reference to inflation as the number one problem, most important problem facing the country. So that is going to be front and center more than anything. In terms of turnout, we've certainly seen higher than average turnout last we checked. We're actually in the field checking that now, but it wasn't as high as we saw with the fervor we saw 2 years ago. The social issues are certainly going to be critical in some of these contests, but overwhelmingly, the economy is going to be central on people's minds as they go to vote.
I've got, Mohammed, 159 million, which is a ginormous number for the 2020 election. I don't have the midterm statistic of 2018. What do you people see on the turnout of America for this election?
It's still too early to tell.
You don't
really,
know,
Tom.
Interesting.
We don't know, and I don't think anybody really knows for a series of reasons. We certainly ask Americans, are you planning to vote? Are you more excited to vote this time than in previous elections? That metric is tracking higher than average, but certainly not as high as we saw 2 years ago. It's about 10 points lower than that. We're actually asking that again this month, but as we get closer to the election, there are a lot of factors that play into making this one really hard to guess turnout. First of all, people's voting habits have changed. Second of all, people's attitudes about voter laws have changed. People want to really open the doors to make it easier for people to vote. Most Americans support voter ID, for example, to have people vote, but they also support a series of other measures that make it easier for people to vote. So in addition to excitement to vote, there are also structural changes to the way we vote in America that are going to continue to roll out for these next several elections.
Well, Mohammed, when we talk about excitement to vote, there were a number of social issues that the thought was would be a galvanizing force in these elections, one of them being abortion rights. Is that taking shape? Does it have as much firepower as initially thought several months ago when Roe v. Wade was overturned?
We certainly have seen an uptick in people saying that it's important for them as a voter to vote for someone who shares their view on abortion. Now it's about 52% of Americans hold that view, and that is a relative high compared to before. However, it's only really about a 10 or 11 point jump from before the Roe v. Wade overturned decision was leaked out. So it hasn't exploded, but it certainly has risen in terms of being an important issue. Right. One of the things we were talking about at the break is everybody voting is thinking about inflation because we're all impacted by it. Not everybody voting is voting somewhere where abortion is really on the ballot.
Mohammed, I want to go to the heritage of Gallup back to the 1930s. You guys basically invented the industry, and you have a monitor and a body of knowledge about, say, that evening when LBJ stepped aside. What do presidents do the evening or the day after a midterm election?
Well, most incumbents usually don't do great in a midterm election. It's always an uphill battle, no matter who the president is. So President Biden is not facing an easy route. However, these social issues and some of these other factors may play a role in really helping the Democrats not fare as poorly. The other thing we're not talking about, which is more important than any of this, is the jurisdictions and how districts are managed throughout the United States, and what seats are really at stake between Republicans and Democrats. And Democrats are really facing a huge challenge just in terms of the seats that are up for grabs.
Mohammed, thank you so much. Mohammed Yunus, definitive, is editor-in-chief at Gallup here as we move to the election. And, of course, David Weston leading our coverage here of a most interesting Tuesday evening. Alan Ruskin, publishing moments ago at Deutsche Bank. He and I have done FX for years. Lisa, it's a short note, but that means it's always interesting, on the nature of the money coming into America. And Ruskin says this time is different. The inflows into America, the nature of them are more balanced. They're not tactical races to short-term paper. And he says that speaks to a dollar renaissance, to a more resilient dollar.
This idea that it's not just positioning, right? It's not because people are moving into derivatives to hedge some sort of bet. This is people making a longer-term bet that the dollar is going to be the place to hide out because the U.S. economy is going to weather the storm better than others. Although we still wonder, at what point does something else break? We are getting Procter & Gamble results, for example. We've seen from company after company, Tom. Yeah, they are seeing full-year earnings per share at the low end of guidance because of the dollar and Forex impact. So this exactly speaks to that point. So at what point does it become a problem for the United States in a way that the Federal Reserve can't ignore?
And Kaylee, this goes back to revenue, folks, as being about unit and price. Procter & Gamble organic sales will be substantially lower for the remainder of the fiscal year as price increases slow. That's a wow headline.
Yep, and that dollar impact is going to be showing up in a lot more results, I reckon.
Right.
You saw it with Netflix after the bell yesterday as well.
We'll have to see. Procter & Gamble out. We'll dig into that and give you more in a bit. Futures, they go red, -1. Stay with us from New York. This is Bloomberg.
What you're going to see dominate over the next couple of months is volatility.
There's still work to be done, I think, before we can say this bear market's over.
Higher global interest rates, lower equity prices, and a stronger dollar, we think will continue into year-end.
I think people understand that if you're a longer-term investor, eventually the tide will turn.
There's so much fear out there, and it's been priced in, so I think we get this little bounce.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio, on television. November 2nd beckons, and worldwide what beckons is double-digit inflation. Kaylee Lyons in for John Ferro. He's giving a paper over in Scotland. Thrilled about that, and congratulations, John, on that. But Lisa, we got to go. I'm going to start out with, I'm sorry, UK 10.1% inflation matters in Washington.
The highest, matching the highest levels going back to 40 years. Again, yet another country coming out with higher than expected inflation. Higher than expected hits to consumer balance sheets. And this really ratchets up the pressure on central bankers saying, great, you guys have definitely raised rates. You got to do more.
And what's so important to me, surveillance correction in Washington. I was with the Netherlands central bank head, great guy. And I said, well, you know, it's 11% inflation in Netherlands. And he stopped me in the middle of the interview and said, no, it's 17%. Like we're losing perspective on double digit.
What does that mean?
Don't fall off the edge there.
It's okay. I'm trying to. Maybe I need something special for my hair. But I do think that we are looking at a scenario right now that has not been seen in years. And I keep going back to what Steve Rasciuto said yesterday of Mizuho. I thought that was actually somewhat stunning. And we heard the same kind of tone from Jerome Schneider of PIMCO, which is where we end up is probably closer to 2% than 0%. We're not going to go back to that 0% range. And if that's the case, how much are markets fooling themselves, pretending we're going to end up back where we started at a time when that does not seem likely given the protracted nature of some of this inflation?
And at this moment, with yen breaking out 149.60, we're going to focus on really important headlines from Procter & Gamble. We go to Cincinnati, and I'm sorry, Kaylee Lyons, these are jaw-dropping consumer product headlines about the consumer. And you know, I'm looking at 40 headlines, Kaylee, save me here. The bottom line is they're saying the inflation organic revenue lift, it's over.
Well, the idea being that to this point, they have just raised their prices to combat the higher input costs they are facing. Now they're navigating their ability to continue doing that at a time when the American consumer spending power is deteriorating. And you see that show up in the results, but also showing up in the results, to your point about the yen, Tom, and basically any G10 currency or any currency you're looking at, is the strength of the dollar hits them on the top line when you have sales overseas. They're worth a lot less when you bring them back home. And I think we're going to see that dollar headwind really reverberating throughout
I actually
earnings
noticed a luxury item today. Usually it's a 2-3% haircut, and they're modeling 6% for one of the luxury companies. And of course, P&G is a multinational there. I mean, I'm sorry, Lisa, these headlines are really germane from Procter & Gamble. Consumers' willingness and ability to pay ever more for staples is coming to an end.
Well, it's coming to an end maybe, right? We're seeing the shares pop by more than 2% in pre-market trading. People still spending. They beat with respect to where their sales came in. People are willing to spend, but they are bringing less home and expect that to end. There is a feeling now it's still okay. What about in 6 months?
We're going to say, I want to do this. I want to go to London. Lizzie Burden is not with us right now. We've got Emily Rowland coming up. But these images are historic of a United Kingdom back to the beleaguered middle 70s, Chancellor Hunt sitting behind the Prime Minister. For those of you on radio, Ms. Truss has leaned over the desk. I've witnessed this personally a couple times, Lisa, and it's absolutely original for Americans.
Okay, so she's coming out and she's saying that she is sorry for mistakes in economic plans, saying that it's right to make changes to the economic approach. This comes after she basically saw her entire agenda reversed and absolutely abnegated, and it comes as her popularity rating is below 10%, Tom. How do you really speak to a time when you have Kayleigh at popularity that's that low?
And Kayleigh, now the head of Labor, Sir Keir Starmer, speaking as well. You wonder what their response is going to be, because we don't know when the general election is, which I still don't get.
Yeah, I wish John was here to explain the UK political beast. But to Lisa's point, it is a question of credibility of the government. We have seen U-turn upon U-turn in terms of some of these policies, but not all the way yet. They still have tens of billions of pounds worth of budget gap that they need to plug. So it is a question now, do they tax excess profits for banks and energy companies? I mean, there is still a lot of unironed out questions here, not to mention the fate of the Prime Minister herself.
We're going to monitor this. Lizzie Burden outside Parliament as well. Let me do the data check here quickly. Futures up 5, Dow futures up 14, the VIX 30.99 goes nowhere in this big equity lift. I do want to point out stronger dollar, not through to new highs on DXY, but there it is in yen, 149.64. All of global Wall Street watching yen.
And also watching the pound as Liz Truss speaks, hitting new intraday lows, 112.35, which we're also watching. Today, we're going to be listening to the Fed speak, which seems to be a daily grind. Minneapolis Fed President Neil Kashkari speaks again. St. Louis Fed President Jim Bullard speaks twice. Chicago Fed President Charlie Evans is also speaking. We're also getting the Beige Book at 2 p.m. Today, those earnings really are going to be front and focus. We did just get Procter & Gamble. They're being received well. There is this feeling of relief, but again, how much visibility do we have into the future? We heard after the bell yesterday, Netflix doing much better than expected, up more than 13% in pre-market. United Air as well. We get Tesla and IBM among others after the bell. 1:15 p.m. This may be the most important point of the day. President Biden speaking at 1:15 p.m. about what to do about energy prices. Some people would argue that the immediate concern for gasoline has gone off. Diesel front and center. He has pledged to potentially release more from the Strategic Petroleum Reserve. How much more can he do at this point? What's the trigger? What's the policy? What's the process? We're going to be speaking with Amos Hochstein later today.
Let's dive into it. Emily Rowland with us now with a very sharp note with the John Hancock Investment Management Shop in Boston. Emily, thank you so much for joining. I love your note where you look at the quality of quality, whether it's in bonds or in equities, the nature of quality into the end of the year and next year. Do I need to buy quality or can I take more risk?
It's all about quality right now, John. And remarkably, there's been a big dislocation in the macroeconomic backdrop. Clearly, we're in a decelerating environment right now. And the market leadership to us just doesn't make a ton of sense. The S&P 500, of course, down in bear market territory, quality down more, high yield bonds outperforming the aggregate bond index. This is not the type of market leadership you see heading into a global recession. So we think that there's a nice opportunity here.
Did you see how she confused me with young Ferro?
Well, you guys look very similar.
Well,
we're
both
close.
John uses Olaplex as well, so I can see the confusion.
Emily, save us, please. There's an issue when you talk about leadership. When you talk about leadership, what does that mean to you in terms of what the market is getting wrong, especially since the earnings are pretty good? Maybe the signal is being sent that is correct, that perhaps the markets have overreacted to recession risks.
Maybe. I mean, let's think about it this way. And Lisa, you made this point earlier. Q3 was fine. You think about the economy, the leading indicators were still doing all right. It was really just the end of the quarter where we started seeing some significant deterioration in the data. So we look at, everything we've heard about the consumer in the third quarter, still willing to absorb higher prices, Netflix seeing more subscribers, Nestle saying that they're still able to pass along higher prices to consumers, but we're starting to see cracks in that story develop, whether it's something anecdotal, by which I mean on Twitter, which suggests that, potentially vacation rental properties are starting to see really significant declines in occupancy rates. More traditional data like retail sales coming in flat. Forward guidance from some of these consumer staples companies indicating that consumers are starting to protest higher prices, given the elevated cost of capital, given the persistent elevation of commodity prices. So I think the consumer, as we all know, is the workhorse of the U.S. economy. And I think we've got to watch some deterioration there.
Emily, to that point, if we are seeing the consumer pushback, if we're seeing the demand deterioration, arguably that's exactly what the Federal Reserve wants to see. So is something that's bad for corporate earnings, but possibly a positive when it comes to the tightness needed of monetary policy? What does that mean for the equity market? Is a bad thing then a good thing, or is it just a bad thing if it's earnings driven?
I know, right? It's good news, bad news, bad news, good news. It's tough to kind of parse that out right now, but certainly, the Fed is probably, happy with the fact that, the equity market is showing a little bit of, challenge here this year. Financial conditions are tightening, but the problem is, how far is the Fed going to go? Their gloves are off in the fight against inflation. And I think the Fed's going to be able to get inflationary pressures to subside, but at what cost? What is going to happen here? They're going to be dealing with a much bigger problem next year.
Emily, you're out in Framingham giving a seminar, and somebody from the cheap seats goes, I'm down 28% in my bond portfolio. What do I do? How do you respond?
John, Tom, I did. I just
You're killing.
Sorry, Tom. Sorry.
Would you call up Colgate Palmolive and tell them I need the Irish Spring charcoal hemp shampoo like Ferro uses? Continue, Emily.
So listen, you guys, this is the worst year in history for bonds. You have to go all the way back to, even going back to 1928. It has been absolutely brutal. But we don't think about bonds the same way we think about stocks. What do we all start to say when we're looking at stock bear markets? We want to start chipping away. Our favorite stocks are starting to look cheap. We don't ever talk about bond bear markets. They used to be like little koala bears, right? And now we've seen this grizzly bear of a bond bear market, and nobody's really flipping the script to talk about the fact that you're getting 5% on the aggregate bond index. We haven't been able to say that in over 10 years now. So look at that income, move up the capital structure, get paid to wait as this more challenging macro backdrop plays out.
Now, Susan, don't be a stranger. Thanks so much. Susan Rowland with John Hancock Investment
That's my mom's
Management.
name.
Thank you. That's your mom's name. I nailed that. Great. I just want to say,
Emily,
folks,
thank you.
I literally wish, folks, that we ran the wonderful commercials. Thank you to Scott Havens for making the place go. And we ran them down so everybody could see what we do in the commercial break. It is a firestorm of Girl Talk today on Olaplex. Every single guest that's come on knows about Olaplex.
Okay, let's be fair. How many are talking about Olaplex and how many are talking about Irish Spring?
Well, the same. I'll go with that.
That's the same? Is that male or female? Take a look at those ads from 1978.
Ferro, what's great about this, I wish John was here, because Ferro uses number 3, number 4, and I think he uses number 5 in the Olaplex system. He uses it every day.
Really?
Yeah.
Really? You went there, didn't you?
I did. I went there.
Yeah, exactly. What are you doing?
You can't make this
gave him the look of disapproval.
Red and green on the screen. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Ukraine's military claims 13 drones made in Iran were shot down in the southern Mykolaiv region overnight. It happened as officials have reported more attacks against the country's infrastructure. President Biden's administration is pressing Congress for new authorities to speed up production and transfer weapons for Ukraine. Hong Kong Chief Executive John Lee has unveiled a plan to woo back foreign talent and ease housing woes. It's an attempt to revive the city's status as an international finance hub. Lee announced he would cut property duties for non-permanent residents and relax visa rules. Years of tough COVID-19 policies and political turmoil triggered a brain drain in the city. Nestle CEO Mark Schneider says inflationary pressures will continue into 2023. In an exclusive interview with Bloomberg, Schneider spoke about the company's effort to protect margins with price increases and the impact of energy costs in Europe.
What we're clearly seeing is some of the inflationary pressures continuing. So this is not over yet, and some of this will kind of go into 23. When exactly it's going to peak, I think a lot of that has to do, especially in Western Europe, with the energy situation, because that's a big driver of inflation.
Schneider remains bullish about the brand as demand is strong and sales are surging. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
We've seen a lot of headline ping pong from the UK, but I think at this point, given what we've seen in terms of the walking back of the budget, gilt volatility can come down, and we can see some of that stabilization in global term premium, which can allow the yield curve in the US to go back to that flattening trend.
Kelsey Barrow, JP Morgan Asset Management. How about this, folks? Yield up, price down. That's the analysis you need to know.
Thanks.
And
Thanks,
you see
Tom.
it. Thank you. I nailed that. Lisa, you see it in the
fantastic.
2-year yield today, 4.50%. 4.50 is not 4.49. There's a difference.
There is a difference. It's
Yeah.
breaking through, and you're seeing it throughout the entire curve. Where is the finish line when you've got likes
Right.
of Neil Kashkari saying, we're not done yet, and we could be quite far.
Quite serious, actually, is a moment in British history. Let us wade in here with members of the House of Commons. Remember, the green leather is the House of Commons. Here is the Prime Minister of the United Kingdom, quickly.
Of course, chaos in the markets and wrecked the economy.
Prime Minister.
Mr. Speaker, we do face very difficult economic times. I have been honest about the mistakes I have made. But what I don't apologise for is the fact that we have helped households through this winter, through the energy price guarantee, the fact that we've reversed the national insurance rise, and the fact we are taking action to get our railways running rather than being disrupted by the militant trade unions she supports.
John Barron.
Questions from the floor there as the Prime Minister speaks, and of course the Leader of Labour, Sir Keir Starmer, there as well. Lisa, as we go to Lizzie Burden, ITV News has it. It's all over Twitter right now. The gentleman from Labour, apparently it's going, oh no, it's on a book. It's a book is being written about Liz Truss's time in office. It's being written right now. Sir Keir says apparently it's going to be out by Christmas. Is that the release date or the title?
Well, and then there's Sir Starmer pointing out that Liz Truss made one promise about not having spending cuts for public spending, and that it just took a week for that to go away. He said, what's the point of a prime minister whose promises don't even last a week? I can say fairly, this has been a brutal session. Lizzie Burden has been tracking it over in Westminster in London. What are you looking for here, given the lack of credibility, given how much pushback, Lizzie? Do we get a sense that there is nothing that Liz Truss can say to really make or break her tenure, that it's already over?
I mean, Lisa, she's been giving her the best performance she could possibly give. She was coming out fighting. I've heard that she's had extra rehearsals this week. The message that she wanted to deliver was that she's sorry, she's made mistakes, she's made changes, she's getting on with the job and delivering. But really, as you say, the damage has been done to people whose mortgages have already gone up, and many of our own MPs will have already made up their minds about her. We're hearing that lots of them have already put in letters to ask for her to go. And remember, former Minister Michael Gove, he said it's when, not if, she should go. And he wants a papal conclave to stick all the MPs in a room and send up a white flame when they're decided.
I'm sure, Lizzie, you'll be there to see the white smoke come out of the chimney. Lizzie, let me cut to the chase. What is the timing of people like Gove counting up letters? Is this about Thursday, Friday? Is it about into November? Is it about making it, as Sir Keir talks about, to Christmas?
It's all a grey area because Liz Truss is meant to be shielded for a year from a confidence vote. Graham Brady reportedly has had the usual threshold outside a year of letters already, and he needs to meet with the board of the 1922 Committee of Backbenchers to decide whether they want to raise the threshold to half of all Tory MPs from 15%. These decisions will happen perhaps this week. Jeremy Hunt, the Chancellor, is going to see and address the MPs of the 1922 committee later today. So it's all happening in hours and days, really. It depends how she does in this performance as well. And let me just say as well, it doesn't just matter about Starmer's questions, it's also how aggressive her own MPs are towards her, and you're hearing them questioning her now.
Well, and Lizzie, among the many things she has said in her answers is that she is committed to the triple lock on state pension payments, essentially making sure that the state pension is in line with inflation, which we learned today is 10.1% in the UK. Is Mr. Hunt going to be on board with that, or is she speaking out of turn here?
Well, who's in charge? It's not clear. Is it Jeremy Hunt or is it Liz Truss? The reason why this is even up for debate is because Jeremy Hunt needs to find £40 billion of savings to plug the fiscal hole. But everything's on the table except for defence and health. All the government departments have been asked to shave 15% off their budgets. So it's how are they meant to achieve growth when they're under such pressure? She says it's efficiency savings. We all know what that euphemism means in politics.
Lizzie, an unfair question to wrap up here, and I think it speaks to global Wall Street. Is the pension crisis in the United Kingdom all clear? The LDI crisis, can we say we've moved beyond that?
I'm never going to say that it's all clear because we don't know what market turmoil lies ahead that could bring us back to that situation. But the Bank of England does seem to be confident that these LDI funds have fortified themselves in the time when the BOE made that emergency intervention.
Lizzie, thank you so much. Lizzie Burden, outside Parliament this morning. This was sterling 112.36, fractionally down. I'm not going to say a big deal. Lisa, I'm looking at the 30-year bond as Governor Bailey looks at it from that 5.04% level down to an okay 4.19, but on a chart basis, really not breaking through to a new lower yield.
Right. Although the fact that there hasn't been more disruption perhaps is a victory, considering that they pulled back their emergency plan to try to support some of the disruption that was caused by the LDI market, by the pensions. At the same time, they did push back by one day, just that they didn't compete with the budget, the quantitative tightening. They are going to go forward with this. Will that be viewed as a positive or as a mistake? And honestly, I'm not sure. I've seen both angles represented in some of the commentary overnight.
Well, they're going forward with it, but they're not touching the long end, right? They're not doing the 30 years. So is that a kind of compromise for Andrew Bailey? Is he trying to tread carefully here, but still ultimately retain that credibility by going forward with QT?
I just don't understand QT. It's a completely original thing, and I read about it, and to me, it's every, as Bremer would say, it's every bank for themselves, and they're literally making it up as they go. Step by step.
How do you shrink a $9 trillion balance sheet, as the Federal Reserve is trying to do? And at what point does it create disruptions that perhaps people are not expecting to see? And this goes to the liquidity of markets that we've seen a lot of disruption to.
7 basis points out in the 10-year yield on treasuries here. The 10-year yield touching I'm going to round it up. Why not? 4.10%.
Who are you?
These are numbers.
He does it out to 4 places. This is ridiculous.
Yeah,
I'm going to round up.
This
is a new
Wednesday.
Yeah, he's using Olaplex. I do think, though, that this is the reason why you're seeing the dollar continue to strengthen, right? Because people do see that rates are going up, and they see the Procter and the Gambles of the world that are coming out and that are still beating estimates, even with the inflationary pressures, even with the strong dollar. Put every excuse in the world, they're still beating.
We do economics, we do finance, investment. To me, the most important economic data of the morning is Procter & Gamble earnings. I thought those headlines were stunning, and really you wonder how all of the sell side comes back and recalibrates on pricing power of corporations. We priced from green on the screen down to red, negative 13 on futures. VIX 31.29. Stay with us with Kaylee Lines. This is Bloomberg. Markets on the move, and good morning. Bloomberg surveillance on radio and television. We're having a lot of fun this morning, but guess what? Markets on the move for global Wall Street, and you see it in the 10-year real yield out 8 basis points, 1.67%. Again, my study is 2.05% pre-great financial crisis, and we are migrating there as we do with a 10-year yield 4.09%. We had a 4.50 on the 2-year yield moments ago. These are interesting markets. Green on the screen has become a little bit red. Negative 18 on futures today. What we're going to do in the equity brief this morning is we're going to move from, well, a show like on Netflix, a cut above, a story about a bankrupt salon, and then we're going to move on to Procter & Gamble, and then finally stagger to the story stock of the morning. Here to straighten my hair, Lisa Abramowicz.
That was quite an intro. I mean,
Thank
we're
you.
moving around.
What do we got?
I did look up what Colgate-Palmolive, since they're the Irish Spring, what they're doing, and they're actually up, or down, I should say, only 13% this year versus Olaplex, which is down by 66%. We'll get there. Netflix shares popping ahead of the open, up 12.4% here after reporting better than expected earnings, mostly also that they're not down in the dumps, they're not about to go bankrupt. I mean, that basically was the bar that they set for themselves, that user growth is not exactly shrinking anymore, and that this is great, but they definitely are seeing something that isn't as positive as it used to be.
I'm an amateur on this. 2 tiers. A lot of people buy the lower tier, so does their average money they take in from a given person come down?
Okay, this is a good point. They're lowering prices. Yes, it's good because they basically are saying, well, everybody and their children are using the same account, right? So how do we get more people to actually pay? And so if they lower prices, does that mean that their profits eventually go down? We're getting a repricing and sort of the disinflationary push of this. The other ones I'm looking at, Procter & Gamble. They came out with the earnings this morning. We've been talking about it since.
Stunning
and it
headlines.
is stunning simply because you see inflation come in. You see the FX impact, the idea that the dollar is strong and their earnings from overseas are lower, and the pricing pressure is even greater for international customers, still beating. Still managing to come out and increase sales more than expected. What does that say about the consumer's resilience for now, even as they lower their full year guidance? And Olaplex, we've been talking about all morning because Kaylee Lines uses 3, 4, and 5 with some bonding mask to make herself
Every
feel
guest
good.
we've had on except Thierry Weissman uses this stuff.
Well, and evidently, Tom will too soon. And really the issue here is some of the darlings that grew up at a time of free money. At what point do you see a massive deflation that has a broader reach than just idiosyncratic potholes throughout the market?
Yeah,
and I think that's an important
I'm going
point.
to editorialize here and say years ago there were roll-ups, and roll-ups were like specialty chemical. What would you do with American cyanamide if you spun it off? Are we going to have a zombie roll-up? I really wonder. Non-profitable.
Do they lower the price from $60 to $30? I'm just saying.
Yeah. Kaylee Lines in
like
for John
that.
Ferro today. We're thrilled you're with us, folks. $84 on West Texas, and Brent, $90 a barrel. Thierry Weissman joins us now, global interest rate and currency strategist at Macquarie, and we have a raft of questions to go 2 hours with Dr. Weissman. Thierry, I have got to talk this morning about what we see from Procter & Gamble, which is the effect of inflation. Corporations adjust, but there's a point where inflation hits a consumer and hits corporate America. It's off your remit, but is that where we are?
Yeah, look, I'm a bit surprised by the fact that a company selling consumer products with a very large materials cost base can do well in this environment. But then I also think, look, maybe the consumer's just not buying the salon shampoo, the high margin product, and maybe going a little bit downstream here, trying to get the lower price point product at a time when they're squeezed by their real wages coming down and higher mortgage payments on their home and all of this. So I'd rather look at this from a macro basis. Let's look at what the whole consumer product sector does, not just one company. That'll give us a better sense of where operating margins are in the economy when they come out.
Are we in a global recession? And I say that after seeing Atlanta GDP at a near 3% statistic. I mean, the United States is not participating in a global recession, right?
And technically, China isn't as well because it presumably is still growing, at least at the margin. The emerging markets are still growing. No, I think the recession we're seeing now is for the most part, a European recession. There's no surprise there. They are feeling the brunt of the energy crisis. Well, are we going to see a global recession? I think that the U.S. will join this recessionary crowd in the early part of 2023. I think it's just a matter of time that we start to see consumer spending come down in the other advanced economies that have not seen the recession yet, like Canada as well.
There's a theory that we're pricing in almost peak rates, that we're pricing in peak Fed hawkishness. We've heard this before, so it's dangerous to say this. But that sort of seems to be a feeling right now in markets. Have we fully priced in the ramifications of that? And at what point does that factor into the dollar and create weakness when higher rates cause lower growth?
So we will not see weakness in the dollar until the other economies start to do either as well or better than the U.S. in terms of their economic activity performance. Perhaps it doesn't have that much to do with rates after all, because in the final analysis, rates just follow growth. If you're doing very well, you're likely to have inflation. The central bank is likely to tighten. So let's go back to growth when we analyze FX and who's going to do well from that perspective. The U.S., to its credit, is still doing well. Now, it may go into a recession next year. We believe it will. But even if it does, it'll be a late recession. It may not be as strong as the recession we see in other advanced economies. And I think in that context, the U.S. dollar can continue to do okay.
I keep going back to this. Do you see 2% rates for the foreseeable future once we get past this era of 4.5% to 5% rates and then coming down never again to that 0% bound?
I don't see 2% rates coming back anytime soon. And I think what we're speaking of now is not the drivers of inflation in the short term, like energy prices, for example, or with the tightness in the labor market. It has much to do with the structural trends in the U.S. economy and the structural trends in the global economy. Climate change, demographics are all, for example, and deglobalization. Let's put that one into the hopper too. Those are the big three mega trends that are likely to be inflationary over the long term.
Wait, so where do you see rates ending up?
Well, they're going to be in the real range, the positive real range, right? Which means that if inflation is running at 3% or 4%, it's very possible that nominal yields, nominal policy rates end up slightly above that and stay there for quite a while.
So is essentially what you're saying a 2% inflation target is no longer realistic for this post-COVID world?
Yeah, that's probably what I'm saying. I think, well, let's put it this way. The central banks have not subsumed into their thinking the long-term structural issues that are going to cause inflation to stay high. Once they do, then they may become more tight, right? They may stop at 4.75 next year. But it seems to me that after that, after a period of waiting, if you ask me what is the likelier move on the part of the Fed, to go down from there or to go up from there, it's probably to go up from there.
Why?
Well, again, because these structural trends are creating inflation. And I think that when the central banks realize that these are permanent and not semi-permanent or temporary, they're going to be realizing that it's going to be much more difficult to get to that 2% target, and therefore they may have to raise rates. Now, whether we get to 2% or not is going to depend on how much they raise those rates by. But I think there's going to be a rethink beyond the recession. It has to do with the structural trends and not the cyclical trends.
At Bear Stearns years ago, you owned the high ground on Pacific Rim analysis. Now you do it for the Great Australian Bank. Give us the level of optimism you have on the Pacific Rim if China can extract itself from this COVID anti-science.
Well, if China can extract itself and begin to grow again, it's generally positive for the Pacific Rim. It's also positive for the Pacific Rim to some extent if the Western economies continue to disassociate themselves from China commercially. I think some economies in the Pacific Rim can do very well by way of capturing a lot of the economic activity that would otherwise go to China and the investment that would otherwise go to China in an environment where China were integrated with the global economy.
To steal from Steve Roach of Morgan Stanley legend, is this a labor arbitrage where in this COVID opportunity, Vietnam picks up marginal manufacturing?
Yeah, absolutely. And Latin America does too, and Mexico certainly does in North America. Perhaps Africa does too, ultimately. It's not just Vietnam. It's a lot of countries that can benefit.
I look at this, and then it comes to the question of dollar supremacy. The Corb 101 here, Colb 101 rather, is you can't have an EM up unless you have dollar weakness. Do you need it as a precursor to emerging market success?
Used to be
dollar weakness.
Yeah, it used to be that case a lot more in the when I was following emerging markets and doing solely that. A lot of emerging markets had a lot of dollar debt on their books, both sovereign and corporate. But I think the emerging markets, to some extent, have learned from previous crises. They have de-dollarized their capital markets. They are relying much more on local financing. Right. They're supported by local financial institutions like pension funds, and therefore the strength in the dollar is not catastrophic. And we're seeing it, in fact, with how well some of the majors in Latin America are doing.
We just told your people you came with an entourage of 5 people. Half of them is a family, folks. And he said to Terry Weissman, he's got to stay around until yen prints 150. What happens when yen prints 150?
Well, maybe you start to see some inflation in Japan, which is what they want to see. I don't think they'll necessarily see it as a disaster. The issue is how quickly it gets there and whether on the way there it causes some disruptions.
But come on, Terry. This was the talk of IMF off the mic. If we get a 150 yen, they intervene, they capitulate here, and they pop. We're opening at 129 or 127, whatever yen. How destabilizing is that yen strength that's theorized?
No, I don't think it's that destabilizing. Yeah, it's look, corporate operating margins in Japan need to go up. They need to pay their workers a little bit more. I think by way of a weaker yen, they're achieving some of that. We haven't seen any financial stresses so far that are directly caused by the weakness in the yen. We've seen the yen has in fact been the weakest of the currencies this year. We still haven't seen any stresses, so I wouldn't worry too much.
Terry Wiseman, thank you so much for being with us. Terry Wiseman of Macquarie. And really, Tom, what he was saying there was so important about this idea of where the real rate ends up. And this idea that we could end up with nominal rates above 2% for a long time, Fed funds rates, because of where inflation is something that has not been priced into markets and really counteracts some of this discussion about how it's too indebted and we can't handle that. And then basically saying it's what we're going to have to handle.
I look at this, Kaylee, is a return to what Terry Wiseman and I grew up with, and somehow we survive. But with that, you clear markets and the zombie companies. We make jokes about it, but I'm sorry. All of these nonprofit entities have to live in a new world.
Yep. Tom Keene growing up and surviving on Irish Spring, right?
Well, that back then, the real yield was 4%. Well, seriously, when Irish Spring came
was
out,
99 cents.
Up to Volcker was 14% treasuries. I mean, it's all there is to it. Futures at -17. Stay with us. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russian President Vladimir Putin is set to hold a meeting of his Security Council to discuss migration issues as Russian occupation officials called on residents of Kherson to evacuate, warning of an impending Ukrainian offensive. The head of the Russian Kuril region said pro-Kremlin officials were evacuating from the main city, but vowed Moscow's forces would keep fighting. Mitsubishi UFJ Financial Group is said to be evaluating an acquisition of some loan portfolios from Credit Suisse to expand its U.S. business. Japan's biggest lender is also vetting bundles of the Swiss bank's global loans in various sectors. Credit Suisse is racing to raise funds with just over a week to go until an unveiling of a critical turnaround plan. The global smartphone market had its worst third quarter since 2014. As economic headwinds pushed consumers to delay discretionary purchases like personal electronics, shipments of smartphones around the world fell 9% in the 3 months ended September, extending a decline that's lasted for all of 2022. That's according to market research firm Canalys. NFL football coming back to Black Friday. The National Football League has struck a deal with Amazon to stream a game on the Friday after Thanksgiving in 2023. The league and Amazon say the plan is for it to become a permanent fixture. The deal deepens a partnership between the two, which this season started streaming the league's Thursday night football franchise. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Big picture, we still have growth that's going to be slowing over the next 3 to 6 months. We still have a lot of monetary policy tightening ahead of us. So I think the way to think about this is a bear market rally. It's short, it's sharp, it still matters, but the big picture hasn't changed, and there's still work to be done, I think, before we can say this bear market's over.
Andrew Sheets, Brown University with Morgan Stanley there, just always brilliant, and really was quite prescient yesterday about Mike Wilson with a little bit, let's cover that quickly here. Mike Wilson with a little bit of a turn, right?
Well, he was
bearish to less bearish?
Well, in the near term and then more bearish in the long term. So this is the whole idea of a bear market rally and where we're headed at a time when people basically are like, I guess earnings aren't so bad, and then they get slammed with, well, maybe they are.
Coming up later this morning, a piercing conversation with one of the brightest lights at 1600 Pennsylvania Avenue Amos Hochstein will join us here, the Special Presidential Coordinator for Global Infrastructure and Energy Security. Looking forward to that again this morning. Right now, we do better than Mr. Hochstein with Will Kennedy, Senior Executive Editor for Energy and Commodities at Bloomberg, in New York with his world-famous team. Let's start with Javier Blas on the Strategic Political Reserve, and it's wrapped around the politics and all that. Javier suggests to me in a typical Blasian message I don't understand that we're selling oil now into the market to make the price go down, except both Republicans and Democrats have us buying oil back actually pretty soon. Is it that confusing?
It is confusing, and I think that there are mixed signals here. They are selling some more oil now. They're saying they might release a lot more barrels over the winter to keep prices subdued, and then there are mandated sales for years to come. So there's a lot of plans to sell the oil, and then they're saying, but we'll buy it back at a price range around $70. So it is confusing about what's going on. What's clear is, as you say, the SPR has become extremely political, and the administration is very willing to use it in a way that previous administrations haven't been.
And we've been talking about this, and John's been talking about this extensively, about how vulnerable this makes us heading into the winter months. And I'm not looking at gasoline. I'm looking at diesel, and I'm focusing on how low those barrels really are.
Yeah.
And this question of what the administration could do about that, because that goes into everything. That's trucker, expenses, et cetera. So what's the proposal there? How much is that on their radar?
So the SPR, in some sense, is a little bit of a red herring because it's crude oil, but the tightness in the market is not crude oil right now. As you say, Lisa, it's absolutely diesel. Stocks are at the lowest we've seen in decades, and that's just as people are getting ready to fire up their central heating in the northeast US, where they use heating oil, diesel, to heat their homes. So it's a critical situation, and there is a very small reserve, but there's no strategic reserve for diesel like there is in crude. So that's why export restrictions actually remain on the table, and there is an active debate in the administration about whether they should limit the export of diesel to Europe, which has been buying a lot of US products.
So what does that do politically?
Well, politically, it's
What's it mean for Liz Truss?
Well, no, that's a serious question, Tom, because Europe is being helped by US energy exports on a huge scale. That's LNG, that's diesel, and if the administration decides to restrict those exports for political reasons at home, that will drive up prices in Europe, where diesel is already also very, very short, and we've had a refinery strike in France, which has constrained supplies of diesel. So this diesel tightness is a problem on both sides of the Atlantic. So acting here will be a problem for the administration's partners in Europe.
Okay, so tightness of supply driving oil prices up. And Will, you mentioned how there is a plan in theory to buy oil back and shore up those reserves once again, which are at multi-decade lows. If the administration says it's going to buy between $67 and $72 a barrel on WTI, we're already down 33% from the highs, and yet we are still nowhere near that level. And when you have OPEC reducing supply, constraining supply more, is it realistic to think we're going to get there anytime soon?
Well, predicting the oil price is impossible, and I would just say that we're only a few years away from negative oil prices, so we just don't know. But I think it's certainly true that there's a real tug of war going on here, and they're setting a floor with that buyback range. OPEC has signaled the desire to defend prices at sort of the $90 range. So what's fascinating about this, I say again, is it's extremely political. You've got people using policy both on the consumer side here on the US and the producer side, and it's become a real tug of war.
Well, and we know that the administration had been pushing for OPEC to do something else, which they did not do. So again, speaks to the political difficulty. At the same time, they've also asked producers back home to pump more oil. And yet it isn't so much the pumping of the oil, it's the refining capacity. You need to be able to turn it into product. What policy solutions are there to solve that problem?
No, that is a huge problem, and we're not going to be building any refineries anytime soon. But the reason refining capacity is so tight is, again, goes back to the situation in Europe. The global system used Russia's overcapacity in refining. Russia has a big refining system, and they exported a lot of diesel. Europe is moving to a place where it won't buy that diesel anymore as of early next year, and that's all putting pressure on the system. And people always focus on crude oil, but it's really on the refining system, the supply of products, which a lot of the stresses are showing up right now.
So what could this administration do? We're going to be speaking with Amos Hochstein coming up, as Tom was saying. What can they actually do other than just make broad proclamations to try to make them look like they're doing something 3 weeks before the election?
Well, I think we need to press him on export restrictions. Now, someone did say yesterday that they're not going to do that before the midterm elections. But if things get very tight over the winter, it seems that clearly is on the table.
Javier Blas gets all the headlines with his wonderful book, The World for Sale. But the fact is, Stuart Wallace, Justin Kerrigan, and you invented the world-class hydrocarbons team here. And what's great is he just sold the movie rights, which I thought was great. And I just heard that Colin Firth is scheduled to play you in the movie, which is, I think, really looks good. I want to ask you, within your team of 40, 50 people, is the United States energy independent?
No.
Why do you say no after all the political garbage I hear out of Washington?
Because this is a global energy system. The U.S. imports oil from around the world. It exports oil too. It exports products. It is a global system, and I think you'll never be in a place where you're insulated from that, where you can have a truly independent policy. I just don't think that's realistic. And the shale industry, one of the key questions for energy going forward is what is the future of the US shale industry? Clearly, the rise of shale has been the most enormous energy story in the last decade or slightly more. But people are starting to worry that it's slowing down. The administration revised down its estimates for US oil production in the last week or so. Yeah. And some people are saying that production might peak within the next 2 years. Now, that's a bold call. We'll see. Yeah. But I think as we look forward on oil, on energy, on US energy independence, the future of shale is really going to be a critical question.
Will Kennedy, thank you so much, and thank you for the once a week, twice a week effort here from London to give us wisdom on oil. I'm sorry, Lisa, this is a huge deal. This energy independence thing, it's incredibly emotional in Washington.
A lot of people have been talking about peak shale just simply because they cannot invest and get the same kinds of returns at the same prices, and that's what you're seeing with a lack of a lot of the same kinds of production from some of these wells.
Will Kennedy with us to give me the right questions for Amos Hochstein. He's Special Presidential Coordinator for Global Infrastructure and Energy. Sir, he's oil czar for President Biden, and he will join us here in a bit. Futures at -17. Good morning.
A lot of factors are putting us back into a more traditional 1970s, 80s, and early 90s mindset.
Big picture, we still have growth that's going to be slowing.
We do think that we are going to see peak rates. We do think that we are going to see peak inflation.
I think we still have a small chance of a soft landing. I don't think we get it.
When you tighten financial conditions this aggressively, this abruptly, things are going to break.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Welcome back. Good morning. Stocks flipping and flopping as they balance some of the better than expected earnings, with rates sending a clear message: inflation higher for longer. Tom Keene, Lisa Abramowicz, and Kaylee Lyons here. John Ferro off. He is not playing footsie with the Dow. Tom, he is off on a well-earned vacation. As we try to parse through the noise, rates higher, 10-year yields. This is catching my notice. 10-year yields in the U.S., the highest levels going back to 2008.
It's deceptive here on a Wednesday. It's supposed to be quiet, and there's not that much economic data. All the talk to me is right where you are, Lisa, which is in the yield space. And I go to the real yield, as we heard from Terry Weissman earlier. It's important. 1.66% is not a negative 1% of ages ago.
Inflation keeps surprising to the upside. And to me, this is the big takeaway for the past couple of weeks, not just in the U.S., in the United Kingdom, around the world. And Tom, we're looking at this and you're saying, where are we going to end up? We are not going to end up back at zero. And that has to be a complete reset for companies, not necessarily in this quarter, but in quarters to come.
Okay, so this morning across global Wall Street, they're going to have their first meeting to do their year-end review, their first look at 2023.
Good luck with that.
Good luck with that.
Exactly.
I'm sorry. I give up.
Well, where's the visibility? And Kaylee, that really speaks to some of the earnings that we're getting with Procter & Gamble really front and center. We've been talking about it all morning, but it highlights the fact that consumer-facing companies dealing with all the industrial headwinds still doing okay for now.
For now is the operative phrase there, because they also lowered their full year guidance because they're looking ahead and saying, yes, we've been able to exercise this pricing power, raise prices for the consumer, pass on those higher input costs. The consumer is starting to change behavior a little bit at the margin, even if it's just buying the cheaper alternatives. So it's a question of how long that pricing power is going to be able to get these companies through. And if we're actually going to start seeing that material margin pressure that you've had the likes of Mike Wilson at Morgan Stanley warning is coming, we just aren't necessarily seeing it showing up yet in the third quarter results.
Tom, you were talking about writing your Wall Street review for 2023. The Tom Keene one is going to be really interesting. I look forward to that next week. But I am wondering whether companies can write that either, right? I mean, to that point, what visibility they have at a time of such quickly changing winds.
Now, I'm going to go, folks, with all the blur of earnings that we see, and, of course, our Bloomberg focus on bank earnings, what we saw from Procter & Gamble today is a huge, huge deal to the late, great Jack Welch and his focus on pricing power. This is the first nuance. You nailed the microeconomics of this, Kaylee, earlier, between unit dynamics and price dynamics. Something's changed.
And what's changing right now is the Fed and the Fed speak, which we're going to get. I keep going to Neil Kashkari. He doesn't necessarily represent the mainstream. He's not necessarily Lael Brainerd. However, coming out, Kaylee, and saying 4.75% may not be anywhere close to the peak, moving closer to Bill Dudley.
Right. He is now one of the most hawkish members of the Federal Reserve rather than the most dovish, essentially saying if you're still seeing that acceleration in core inflation, we're not going to be able to stop at 4.5%. And that's why I thought what Terry Wiseman told us in the last hour was so interesting. He's saying even if they pause at 4% for some time, he thinks it's more likely that they go higher than that after the fact rather than cutting, because we are just in a different inflationary environment now in which a lot of this is going to be more structural. He thinks 2% is no longer a target for the world we live in.
And right now, Tom, looking at just what the markets are showing us, it's just we were positive and they flipped negative pretty sharply heading into this hour. And part of this, to me, has to do with some of the gloom that we're hearing about what could potentially come down the pike and this feeling of what rates do, what higher rates do. We're seeing it down 0.5% right now.
The rates are leading the story today, but foreign exchange follows behind. And I'm sorry, I'm on intervention watch. 149.67. There's a persistency. There's almost an inertial force to Japanese weakness that, you followed all day? No. Do you keep your eye on it, Lisa? You do.
Sure, and there's a persistency of the euro weakness, which continues versus the dollar, and this comes as Italian 10-year yields continue to surge some of the nearest highs. How much does this put pressure on what we're seeing with the ECB? It's really important, though, to understand the 60-40, and I think that we keep going back to that, right? Where is the ballast? Well, that didn't work out this year. I think it's been the worst year going back decades. But what will work as the ballast? Anwiti Bahuguna joins us now. She's head of multi-asset strategy at Columbia Threadneedle. And Anwiti, what will be the ballast going forward if we don't get some stability in rates in the near term?
Thanks for having me, Lisa. Yeah, I think 60-40 has been a bust this year, for sure. But I think a lot of the conversation around these days has been about Fed watching. And you all nailed it when you talked about real yields. So real yields stability is going to be the ballast. But I keep coming back to what does stabilize real yields? And for that, we keep going back to inflation data. And we just haven't seen any signs of peak in that. There are hints, there are forward-looking metrics. If you look at sort of inflation expectations as measured in the bond market, those have come down quite sharply, but they're not at levels where one can say we can declare victory now.
What's so important here is the heritage of Columbia Threadneedle in England, and your roll-up of BMO. And the idea that Ted Truscott, your leader, is from Scudder Stevens. It's the Boston heritage of mutual funds. Lisa mentions the debacle of 60-40. Do you invest now assuming 60-40 stability forward? Or do you have to invest with a different calculation?
I think I'll break that down, Tom, into two parts. So if I look at all my strategic forecasts for the medium term, they are better than I've ever seen in 10 years. 10 years ago, when we were looking at what fixed income might return for us, we were looking at zero yields on the safer bonds and 2 or 3% on the riskier part of the 10-year. Now we're looking at 10-year at 4%, and you don't even have to take a whole lot of risks to go up to short duration IG and get 5-6%. in a very safe, sort of risk-free equity bond portfolio. And similarly, I don't think equities are cheap.
Right.
Equities are probably fairly valued given the amount of uncertainty we have. But again, if you look at the medium-term projections, they're looking much better.
What is so critical here is everybody's been blown up in this unique pandemic-induced bear market. Are we going on to something new, or to revisit the giant pioneer Phil Carret and a way to invest that we knew decades ago?
I think we won't know whether we are going to something new until after the fact. So these structural changes.
She sounds like a. Was that Kashkari?
Carry on, please.
So we do. I think that's a very important question, Tom. We do grapple with: is this a new structural regime for inflation?
Exactly.
To your question, does inflation stay around 3-4%? And we don't know that. So you could have theories that deglobalization and whatnot is going to keep inflation high forever. But for the moment, I haven't seen enough evidence that there's been any sort of break in the way things function. Yes, we're going through a painful period in the markets. I'm living it every day. But I think if we have a medium-term perspective, then you stay the course, stay the strategic allocation that you have in mind, and do not panic when that 60-40 is already down 25%.
Okay, so you're looking out over the medium term. In the more near term, though, I'm wondering how you're viewing political risk, because we've seen what happened in the UK, what is still ongoing in the UK, frankly. The questions Liz Truss has been getting as Prime Minister in Parliament this morning, and we're just 3 weeks out from the midterms here in the US. I mean, is it time to be thinking more about domestic political risk rather than broader global monetary policy and geopolitics, as we've been talking about for this entire year thus far?
Absolutely, Kaylee. That's an excellent question. So no one's been talking about the political risk here in the U.S. You saw how the LDI market, the bond market, reacted in UK when the market did not like the fiscal plan that came out of that administration. Here, I think all the data that I'm looking at, all the opinion polls I'm looking at right now is saying that we're likely to have a divided government for the next 2 years. So I think the market can live with that. But if we see a sweep in one direction, and at this point it means sweep in the Democratic direction, what sort of fiscal policies come through and how does the market react to that is a key risk at this point.
Anwadi, thank you so much for being with us. Anwadi Bahuguna, thank you so much, of Columbia Threadneedle. And to that political question, one thing that we keep hearing, Kaylee, exactly to the UK risk point in some of the upcoming debates has been reducing the deficit. We heard that from Senator Warner just yesterday.
Well, he basically admitted that the size of the fiscal stimulus was a bit too large in hindsight, that the U.S. did too much. And to Anwadi's point, it becomes a question of, is it a bad thing to see the status quo in that it would mean potentially more spending that, in theory, if you had a divided government, it wouldn't be able to make its way through?
And Tom, you've been out front, the 3%, the Adam Posen type, where are we going to allow inflation to stay?
Yeah.
And it might not be within even the realm of control, right? What if there are some of these stickier kinds of aspects to the regime that we're in that lasts longer than perhaps we can tolerate, say, 5% rates?
In Washington, nobody talked about this on camera. Everybody talked about it off camera. And there's some form of hoped glide path, which has not occurred in the last 90 days, of a lesser inflation, maybe with kinks or pauses along the way to what? And what's important is I'm not even sure right now the what is 3%, the Posen statistic, or Blanchard's framed 4% years ago. Maybe it's 5% just to get there.
And it's the political question of how much pushback this Federal Reserve gets as it continues to raise rates. And we have the crimping, particularly in the lower deciles, to use your phrase that you've been talking about extensively. Coming up, we have a further conversation, particularly about where we are with the dollar. Vasily Serebrikov of UBS. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The European Union is set to propose sanctioning 3 Iranian generals and 1 business for providing military support to Russia in its war against Ukraine and their involvement in providing Moscow with drones. The targeted business is responsible for the Iranian drones that have been supplied to Russia, the generals involved in Iran's cooperation with the Kremlin. Shanghai will build an isolation facility that can house thousands of people near the city. Now it's another sign that China is unlikely to shift away from its COVID-0 policy anytime soon. The facility will be constructed east of Shanghai's business district in an area covering about 35 acres and will have more than 3,200 beds when completed. Nestle CEO Mark Schneider says inflationary pressures will continue into 2023. In an exclusive interview with Bloomberg, Schneider spoke about the company's effort to protect margins with price increases and the impact of energy costs in Europe.
What we're clearly seeing is some of the inflationary pressures continuing. So this is not over yet, and some of this will kind of go into 23. When exactly it's going to peak, I think a lot of that has to do, especially in Western Europe, with the energy situation, because that's a big driver of inflation.
Schneider remains bullish about the brand as demand is strong and sales are surging. And it's a coffee crossover. Starbucks has entered into an agreement to sell the Seattle's best coffee brand to Nestle. Starbucks says the move will allow the company to focus on elevating the coffee experience through its own brand and help strengthen the Global Coffee Alliance, which it established with Nestle in 2018. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
I think we still have a small chance of a soft landing. I don't think we get it, but that's what the market's going to start pricing in first, is a softish landing, and that's going to drive this rally.
Pete Shear, head of macro strategy at Academy Securities, and this is really the soft landing debate. A lot of people saying softish, maybe not a super hard landing.
Very ishy
and
this morning.
It is ishy, and we're seeing that in terms of what we're pricing in. And we heard overnight Citigroup coming out and saying that stocks have priced in a recession, possibly more than other assets, but it isn't overdone yet. Right now, we are seeing a bit of softening. And Tom, you were talking about this sort of whippiness. We started with some gains. Now we're a little bit lower, although we've retraced some of the more extreme losses down about 0.4% yields. I just keep going back to 10-year yields. To me, this may be one of the key stories. Breaking out, hit 4.1%, going back to 2008, some of the highs, and really fed by some of the discussions about where we end up with inflation once we're done with this post-pandemic surge.
So we get to our FX guests. Let's do some hands for radio. It's real nice to see on radio, folks. The fact is the 10-year yield is coming up, but inflation dynamic, which means a larger real yield, and we see that with 1.66% on the real yield. That is a change as we go into this Wednesday. One of the great points today was away from FX, but not, and that was Procter & Gamble of Cincinnati, with a set of headlines that are perhaps the new reality for multinationals in America. From UBS, their foreign exchange and macro strategist Vasily Serebryakov joins us right now. Vasily, I don't want to do like euro. What's a euro going to do with sterling? I want to know, when you advise Procter & Gamble in Cincinnati, what the dollar strength means for their operation. They made clear there are FX headwinds.
Absolutely. I think you're starting to see it more and more in U.S. corporate earnings. And in fact, the earnings season that we're entering or have entered is probably going to show more of that. I think that corporates and investors in general should be prepared for the strong dollar environment to persisting for a bit longer. The dollar is certainly expensive, but it doesn't mean it's necessarily overvalued. And to your previous point, if you kind of account for real rates and if you also account for the global growth downturn, the dollar strength is quite easy to justify.
Vasily, I was talking with a guy named Axel Weber, a nodding acquaintance with your UBS, and of course, a former head of the German Bundesbank. And he made very clear to me, it's not so much the rates have changed now, but the level. If the dollar just sustains at this level, what is the ramification for other nations?
Well, the ramifications is that, it's once again our currency, but your problem, right? Because in a sense, a lot of policymakers around the world would probably prefer a stronger domestic currency at the moment in order to fight inflation, but they're not getting it. They're getting a weaker currency, and only the U.S. is getting some perhaps benefit from a stronger dollar in terms of fighting inflation. The issue is that we're not detecting a lot of serious concern about dollar valuations. This is not like the pre-Plaza years when there was a strong sense that the dollar was divorced from fundamentals, that we needed to do something about it. Generally, U.S. policymakers have said, markets are functioning well. If you look at rate differentials, if you look at terms of trade, if you look at growth, all of these things combined can justify the current levels of the dollar. So really, I don't think that anything is going to change that sort of from the policymaking front or sort of the G20 coming together and changing the dollar policy. I think what could change it, and will change it ultimately, is the peak in U.S. inflation and the global growth rebound, but that's, of course, remains some way away.
Where is Europe in terms of strength or weakness? And we see ongoing euro weakness today, and how much of this stems from the Italian yield, I'm not sure, but you are seeing ongoing weakening in some of the peripheral rates, given the inflation, given the economic outlook. How do you view the necessity for Europe to have some sort of recovery before dollar strength gets diminished?
It's a very essential part of it. I will offer a little bit of a glimmer of hope for the euro, at least. If you look at European gas prices, for example, they're multi-month lows. So at least some of the energy sector pressures appear to be abating. That's why I think that you're seeing the euro kind of trading around this 97, 98 level, not going to 95 or below, as I think many market participants were perhaps anticipating. So there, we have a little bit of a sense of hope and stability, but it's really hard to see the euro doing anything significant or rebounding significantly until you get through the winter, until you get a sense that we can pull through this without energy rationing. And then, of course, the things that you mentioned, such as Italian spreads and so on, I think it's just the side effects of a weaker economy, where those kind of market metrics tend to play more into the psyche whenever the overall growth backdrop is weak. So I think there's some hope for the euro in terms of stabilization at the lows, just from the gas prices, but we're still not at the rebound stage for sure.
Well, you talk about the prospects of weaker growth, and that's something facing China as well. Perhaps not an outright recession, but certainly not the kind of growth China has become used to. And as we've been talking, Vasily, the offshore yuan now at another record low against the U.S. dollar. 7.27 is roughly where we trade at the moment. Can China do anything to stem that weakness?
Change zero COVID policy, and as you just said on the show, it doesn't look to be likely very soon. I mean, to be fair, China has been in a very weak economic phase since the second quarter of this year, so this is not necessarily new. I think it's sort of more of the same. Obviously, we're seeing sort of weakening attractiveness of yuan from the interest rate perspective, from the capital flows perspective. From the growth perspective, so in terms of recommendations, we've been solidly bullish U.S. dollars against, against the renminbi, or against the Taiwan dollar. That hasn't changed. We think there's more upside. And to some extent also, if you look at kind of this dollar rally from a maybe 1 to 2 year perspective, the Chinese currency has lagged a little bit in terms of weakness versus, say, the euro and the yen. So there's still a little bit of a catch-up going on as far as the Chinese currency. Yeah, but I think, unless we're seeing a change in the zero COVID policy, it's really hard to change the view on the yuan at the moment.
Vasily Serebrikov of UBS, thank you so much for being with us. And Tom, I keep going back and thinking about your conversations with the IMF, the back office conversations, not necessarily those that were on screen. People talking about where inflation could end up and how it could be sustained, in part because there isn't anything that really breaks the mode that we're really in right now.
Well, yeah, and again, I go back to the media loves y-axis analysis, change, surge, plunge, cratered, whatever. The adults are on the x-axis, worried about time, and what we've learned this year is transitory. Remember transitory? We were younger. Yeah. Okay, we're not transitory anymore. We're out somewhere with a complete unknown into next year. There's guesses, but that's just what they are.
Well, and this goes to the Mohamed El-Erian point. at what point do some of these Fed officials have to give mea culpa or say we got it wrong or say something isn't working and we understand that we made a mistake in the parameters that we've been looking at? Right now, futures are lower. You can see the S&P down 19, 37.13. You can see the 10-year yield heading toward 4.1%. The real yield, as Tom keeps mentioning, surging. Just did that for you, Tom. 1.66%. Surging. Just moments away from the Housing Starts Wednesday, which I assume is what we're going to be calling it. We are seeing the S&P lower now by nearly 0.6%. Michael McKee, Bloomberg Economics and Policy Correspondent, with us here to break down the numbers as we get them. Mike?
Well, we're getting them right now, Lisa, and it looks like a beat on expectation. No, a little bit less on expectations, put it that way, but down from last month. An 8.1% decline on a month-over-month basis in housing starts, 1,439,000. The expectation was for 1,461,000. Now, that's the annual rate at which they're built out. Building permits, we're looking for here. Building permits come in at 1,564,000, and that is lower than that's better than expectations. That's because they revised it here. 1,542,000 was last month, so it's still better than last month. So it does show that builders have some, shall we say, business left to do? I was going to say some confidence these days, but we saw the home builders index yesterday fall to the lowest basically since the 2008 financial crisis brought on by housing. And so it doesn't look like they have a lot of confidence, but they do have a lot of backlogs, and they are putting housing starts, they're pulling permits, and I guess they will probably put some of those houses into the ground.
So just want to give you a sense, I don't know if you can attribute it to this data, but you're seeing the 2-year yield breakout now at the newest highs since going back to 2007, 4.52%. You could see the dollar gaining. You could see the opposite effect, and this is basically what's good for stocks is good for bonds. What's bad for stocks is bad for bonds. You're seeing losses deepen in the S&P lower. And Tom, this really speaks to what you've been talking about, which is basically how much are people looking at housing, the resilience there, not necessarily giving pause. 0.7% decline right now on the S&P.
It's there, and you see it in north of the border in Canada, with once again a more persistent inflation as well. Michael McKee, on a global basis, 10.1%, United Kingdom, 6.x%, Canada. This is a theme, this new persistency of inflation. Is it a theme that drifts away according to the guesstimates, or do we go into the end of the year and into next year further distant, I should say, from transitory?
Well, that's a big debate right now.
Yes.
A lot of people suggesting that there are forces out there that will bring inflation down, that we can only see them on the horizon, but they are going to start affecting the overall level of inflation. Others are saying, well, the problem here is no longer the transitory stuff, which may go down. It's the cyclical aspect to it. Chris Lowe of FHN Financial this morning saying cyclical inflation is the hardest thing to get rid of because the only way to get rid of it is to end the cycle. So the only way to get rid of it would be to have a recession. And that is concerning to him. The one thing we can say about housing, other than the construction part, which may be due to backlogs, and there is a very large backlog supply out there, is that housing is the one area that has responded to the Fed. Mortgage applications down 4.5%. They're down 58% since the Fed started raising rates, and by some measures, we've got 7% 30-year mortgages now.
Well, we talk about kind of the need to get inflation down. Obviously, that's what the Federal Reserve would like to see. They probably aren't seeing it to the degree that they want to yet. And we keep seeing these continued upside surprises. And we've had conversations over the last several hours that inflation isn't realistically going to get back down to 2%. We could just be looking at something structurally higher. When does the Fed decide to make that call that either they have to go way farther to get down to 2%, or they're just not going to try anymore to get to 2%, that they're going to target something else?
Well, the idea of changing the target is something that people are beginning to talk about, but that's months and months, if not years away. That would be a major decision and probably would wait until their 5-year review comes up in about 2.5 years or so. But the idea that they don't get down to 2%, they accept that that's a possibility. The idea that they have to make a decision of whether to keep going and raising rates, that's going to be a meeting by meeting decision, because we're going to have to see what the data show each time, and they'll have to figure it out. There's no more formal guidance here.
Good to have Michael McKee with us today. Always a Fed speaker. Michael McKee running all of our economic coverage as well. He is director of White House National Economic Council, which means he is mum during the political season, and we are knee-deep in the political season now to the midterms. Brian Deese joins us from the White House this morning. Brian, to me, the singular note which does wrap around your remit is the gentle lady from Hawaii has exited the Democratic Party. And Ms. Gabbard was really something about the cowardly wokeness of the elitist Democratic Party. Your boss is the most middle-class representative boss of his generation. Joe Biden breathes Scranton. What's going to be the reset on Democratic Party economic policy for the middle class coming out of this election?
Well, look, I think you're seeing it in real time. As you said, Joe Biden ran for president based on an economic theory that we needed to build this economy and this economic recovery, as he says, in very practical terms, from the bottom up and the middle out, not from the top down. And you're seeing that in practice. If you look just, for example, at what's happening in American manufacturing across this country, nearly 700,000 manufacturing jobs created, and you're seeing company after company make investments that they're making a bet, a long-term bet to make capital investments in America. Just today, we're going to announce almost $3 billion in grants to battery manufacturers. I was in Cleveland last week. You're seeing this explosion of interest in making the United States the place where we build and innovate, and that's going to pay benefits for the long term.
You were just in Cleveland to see Cleveland Yankees, admit it. Brian, I want to go to the topic of the moment, which is the strategic political reserve. We all get the politics of it and that. You took Hydrocarbon 101 at Middlebury years ago. Can you explain to me what the Democratic politics is of refilling the strategic petroleum reserve down the road?
Yeah, you got it. I do have to clarify that I'm a Red Sox fan. It's important to me to get that.
Very
on the record.
important.
So look, the president's going to announce two things today. The first is additional 15 million barrels for December out of the SPR. That makes good on the commitment that he made several months ago to release 180 million barrels and provide that stability to the market. He's making good on that commitment with a 15 million barrel release today. But second, he's announcing a plan and a policy to refill the Strategic Petroleum Reserve when the price of oil falls to about $70 a barrel. That makes sense for two reasons. One, protecting taxpayers. We sold oil out of the SPRO at a higher price, at around $90 to $100 a barrel. Repurchasing at $70 a barrel means we can actually strengthen the asset. We can get more oil back into that national reserve. And second, it provides some certainty to the industry, because we will have the authority to both purchase when the price comes down to 70 and also enter into contracts to purchase at around $70 in the future.
But one thing that's very difficult is that we're not talking about the present and what releasing more from the Strategic Petroleum Reserve will actually do to bring down prices not only of gasoline but diesel, of the refined goods that we need. How much are you thinking about additional measures to try to shore up both the stores of diesel as well as lower prices? Are you talking about banning exports, for example, to Europe?
Well, first, let's look at where we are. We have, since the beginning of the summer, seen gas prices come down about 30%. They're down about $1.15 a gallon at the pump. We've seen natural gas prices come off from a high of almost $9 to under $6 in trading today. So we've seen a real reduction in energy prices, and that's consistent with and driven by the policies that this administration and that the president have directed. At the same time, we continue to be very focused on making more progress, seeing that price come down further, and the announcements today, I think, are going to help on that front. But also addressing places where we have...
But that has come down. It hasn't come back that much. But diesel has not come down, and that affects the price of everything. And perhaps people don't see it and breathe it the way they view gasoline prices. But this is affecting very much the heating costs as well as the shipping costs, and has raised questions about banning exports at a time when Europe is flat on its back as well. What's your view?
Absolutely. We're very concerned about inventory levels for refined product, diesel in particular, particularly across the east coast of the United States. And we are operating right now at unacceptably low inventory levels for diesel that, for example, are 50, 60% lower than their 5-year historical average. So this is a conversation that we have had with the industry consistently, and we've been very clear. We need to see more progress in building those inventories. The federal government has some tools in that respect. We have a Northeast Home Heating Oil Reserve, which is diesel, and we have looked very carefully at being prepared to deploy as and when necessary in that context. But ultimately, what we need to see is the industry build those inventory levels so that we don't put ourselves in a situation. To your question about exports, the president has been very clear and will continue to be clear. At this moment, when we have uncertainty for American consumers, we have to keep all options on the table. That's what we're doing.
Real quickly, what's going to be the trigger point to understand whether it is time to look at exports?
Well, look, I'm not going to explicitly make a decision before the president or articulate a decision before the president has made it, but the president's going to continue to do what he has done over the course of the last several months, which is assess the market, understand where we are, and understand the tools that we have and the impact that they'll have. Today, he's announcing a release from the SPRO, but also importantly, this repurchase plan, which is something that industry analysts and others have been calling for some time. We think that this will make some difference. We're going to keep at it, keep a close eye on these things with an understanding that we have these tools on the table and we'll deploy them when it's in America's interest.
Brian Deese, Director of the White House National Economic Council. Thank you. Tom, all options on the table, potentially even including banning exports as we head into a winter with very low stores of diesel.
I was with Spencer Abraham. This is a long time ago. On one of the energy battles. I can't even remember the details, but it was where we were attempting energy independence. And this is before fracking and all that. And I can't emphasize enough, a la our feed, thank you for watching and listening worldwide, is this White House in the commodity trading business of gaming prices?
Basically
I've never heard what I just heard.
Saying, here's the floor, here's the ceiling, and we're going to work with it with the battle that we've got, although it's really a refining story as much as it is a strategic petroleum reserve story. Right now, we're seeing crude very far away from the price that they're talking about, still seeing about $89 a barrel if you look at WTI, $84 a barrel, excuse me. Coming up, Tony DeSpirito of BlackRock and Lisa Shallett of Morgan Stanley Wealth Management.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russian President Vladimir Putin has ordered the extension of martial law in 4 occupied zones of Ukraine and stepped up security in nearby regions. The actions come as Ukrainian forces continue to press their advance against his troops. Putin told Russia's Security Council today that existing military law regimes in those 4 regions that he annexed last month should be extended. Hong Kong Chief Executive John Lee has unveiled a plan to woo back foreign talent and ease housing woes. It's an attempt to revive the city's status as an international finance hub. Lee announced he would cut property duties for non-permanent residents and relax visa rules. Years of tough COVID-19 policies and political turmoil triggered a brain drain in the city. Ukraine's military claims 13 drones made in Iran were shot down in the southern Mykolaiv region overnight. Now, it happened as officials have reported more attacks against the country's infrastructure. President Biden's administration is pressing Congress for new authorities to speed up production and transfer of weapons for Ukraine. Rolls-Royce has completed the first step toward fulfilling its promise to sell only electric vehicles by 2030. On Tuesday, it unveiled the all-electric Spectre. Rolls-Royce Motors CEO Torsten Müller-Otzfos tells Bloomberg that contribution margins per car are untouched and says Rolls-Royce will be very profitable. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
We believe that these markets require patience, diversification, and discipline. We do think that we are going to see peak rates. We do think that we are going to see peak inflation. But what you're going to see dominate over the next couple of months is volatility. And so you will see these type of counter trend rallies
Christian Bitterly, Citigroup, there with some of the thoughts on the market, and just since that conversation, it got a yield structure higher, the 2-year yield out to 4.52%. You're greeted on a Wednesday morning by a higher yield environment off inflation that won't give up. Kaylee Lyons in for John Farrow. Again, Farrow giving a paper, playing footsie with the Dow. Really looking forward to that. This is at a symposium in Scotland on the history of the Dow Jones Industrial Average. Thrilled that John's doing that this morning. This is a joy. Because when you go to Boulder, Colorado, you know that the Zoomies are down to Colorado Springs, and they're the real deal. Out of the United States Air Force Academy, an actual pilot running an airline, the chief executive officer with United, the pilot, Scott Kirby, joins us this morning. Scott, I got 18 questions from viewers that have everything to do with the United Lounge, this, that, and the other thing. I want to talk about the ratio of business class to economy fares. I follow one United fare, and it's $6 for every dollar of economy. I've never seen it. Where is business class in 3 years?
So thanks for the intro, by the way. That's a unique one, and I like it. But business travel, business class demand is really, really strong. It's really, really strong in economy, but it's even stronger in the premium cabin. United has more premium seats than any other airline in the country. One, long-haul business demand has mostly come all the way back to Europe, at least. It's even stronger than it is domestically. It's harder to do calls with someone in Europe. But the other trend I think that's huge is there's more premium leisure demand, and really that is enabled by hybrid work. Hybrid work makes every weekend a potential holiday weekend, and there are people that will go to Europe and they'll work for 1 or 2 weeks in Europe, and they work during the day. They go out late at night with the French or the Spaniards. By the way, that's the only way I could possibly go hang out with the French and Spaniards if I stayed on East Coast time. And we got this. I think it's a permanent step level increase in demand, both for weekend travel, but also for premium demand.
To the volatility, the cyclical nature of your total return of stock, is the new persistency of cash flow from business class enough to give you a more persistent cash flow on your financial statement?
Well, look, I think we'll still have volatility. We'll still be affected by the economy or short-term in the fuel prices. So it won't eliminate cyclicality. But what it does is more important, which I think it raises the level. So the lowest period of revenue will be higher than it was before, and the highest period will be even higher. It doesn't take out the cyclicality, but it does raise the bar across the board. It's just a new permanently higher level of demand.
But to that point, Scott, we've spent the better part of the last 3 hours talking about whether or not we're seeing a softening in demand, which is what policymakers are trying to engineer to bring inflation down. Inflation, which in some sectors of the economy means people are just spending less in certain areas. It does not seem that it has hit air travel yet. Do you expect that the demand deterioration is going to come? And will that ultimately mean you don't have the pricing power to keep fares high?
Well, I think the slowing economy and or a recession are going to be a headwind to demand, already are a headwind to demand. But there's 3 trends in aviation that I think they're currently more than fully offsetting. I think we'll continue to. One, we're still in the COVID recovery phase. Japan just opened last week. No matter what you think business travel is going to ultimately get to, it is going to go high, almost certainly going higher from here. So we're still in COVID recovery, unlike most industries. The second one is this hybrid work, making every weekend a holiday trend. September was the 3rd highest RASM month in the history of United Airlines. That is an off-peak month. What happened during September, and we saw it even earlier, we're seeing it in October, by the way, is going to be better than September, so it's going to move to 4th place, is people are now able to work remotely for 1 or 2 days. So they can, instead of being tethered to their desk at the office, they can leave Wednesday or Thursday, go somewhere, work remotely for 1 or 2 days. They're taking extra trips. That's a trend that's not appreciated by the market yet. It's unique to aviation. But it's offsetting those economic headwinds. It's a tailwind that's offsetting it.
Yeah, and Scott, we call that doing a John Farrow at Bloomberg Surveillance. Why don't you continue, Kaylee, with Mr. Kirby?
Well, that's on the demand side, Scott, but there also is the fact that you are still constrained on the supply side. Capacity is still more limited, and part of that has to do with the labor equation. Can you just give us your best estimate as to whether or not you're ultimately going to be able to expand capacity again, or is this a structural labor issue in the air economy, which is going to stick around?
So first, if you're an airline investor, it would have been the third and maybe perhaps most important trend that while there's a really strong demand environment, supply is going to be constrained for years to come by artificial factors. Now, it's less of a constraint for United because we're at the high end. We're the top of the funnel, top of the pyramid,
right?
For people wanting to be pilot, but there's not enough pilots in the industry. That's not the only constraint. Boeing and Airbus are way behind, and the supply chains are way behind on their ability to produce new airplanes. Air traffic control saturation. There's airports in Europe and other places that are full. These are like 4 or 5 year problems. Even if you start fixing today, multi-year problems to
Scott,
fix.
when you're in New York next time, landing at Newark and hopefully landing at JFK with that battle, I want to talk about the landing gates and all that. But Mary Schlangenstein, who's our ace airport reporter, says if you don't ask Scott about Boeing 737-8 over to a 7, and they're going to add 12 more seats, and they're going to take this wing and add it on. Scott, this is not confidence building with the redo of the Boeing MAX. I mean, it's not confident building. Do you have confidence that you guys in the FAA can get together to get that plane up in the air?
Yeah, well, I think you're talking about the MAX 10, and hi, Mary. Good to hear from you virtually. But here's what I think about the MAX 10. First, for United, if somehow the MAX 10 and 7 don't get certified under the current standards, our plan is we're going to convert some of those MAX 10s into MAX 8s and 9s. And our large airplane, we're going to order more Airbus A321s, and that's going to be our large airplane. And Boeing will compensate us for that. So for United, it's not really a big deal financially, but it's the right safety outcome. This is the most important point. It's just a different length of airplane. It's the same airplane at a different length. And you'd never want to make 2 different cockpits or procedures for the exact same airplane. That detracts from safety. So I think because it's the right safety outcome, we will get to the right answer where the MAX 7 and 10 will get certified like the MAX 8 and the MAX 9. I think the more important point is a bigger one for the country, for the United States of America. Boeing is our largest exporter, high-tech exports, manufacturing jobs, high-paying jobs. And the question is about, are airlines around the world going to buy MAX 10s or are they going to buy Airbus A321s? And the real question is, it's the right safety answer. Are these planes going to get produced in Seattle, or are they going to get built in Europe and Asia and China? Look, I want both Boeing and Airbus to do well for healthy competition, but the right answer is the MAX 10.
Scott, we're out of time. We need to see you when you're in New York next time. Scott Kirby with United Airlines after a very strong earnings report, to say the least. Kaylee, this Boeing Maxing won't go away. It's just been there forever, hasn't it?
Yeah, it's something we'll continue to follow, as with the earnings story more broadly, especially the impact of the stronger dollar that we're hearing company after company warning about. There's more on deck.
Futures at -22, Dow futures at -139. The VIX elevated. We're looking at yields. You need to watch for higher yields. This is Bloomberg.